Good evening, everyone. Welcome to the IBD Meetup. We're located here in Charlotte, North Carolina, and we're broadcasting all across the country tonight. Thanks for attending. Our group is sponsored by Investors Business Daily. We're a group of about 2,500 ardent investors who believe in that a portfolio of individual stocks can change your life. We don't believe in a buy and hold approach. We don't believe in just buying and holding and forgetting about the market or forgetting about our stocks. We firmly believe that concentration and trading can enhance your results and facilitate enjoying strong performance in the market, especially when we're in a bull market currently, like we're in a bull market currently, and we'll talk about that in the presentation. We'll talk a lot tonight about concepts that are featured in the book, How to Make Money in Stocks by William O'Neill. I met William O'Neill in 1988 at a seminar in Houston, Texas, along with David Ryan. And both of those guys really changed my life over the last 30 years. We'll talk about CanSlim a little bit, but that's featured extensively in the book, How to Make Money in Stocks. And many of you are familiar with investors.com. We receive most of our research from investors.com, which is a great site for identifying and conducting research on individual equities. We think the news writers there are quite good, quite adept. The staff they have is remarkable, we feel, and we think that they do a great job. We also will, on the second half of the program, we will talk about stocks, and we'll profile individual stocks extensively, and we'll tell you about the stocks that we think, but first of all, the stocks that we own. We'll reveal those to the group tonight, as well as our focus list, and we'll take as many questions that are appropriate regarding individual stocks. So that's really the second half of the program, and we really enjoy that, because you can't translate your knowledge into performance unless you take action. And we will talk about a number of these stocks where we entered and what the upside that we potentially think that we have in them, and we'll share all that information with you. So again, thank you for attending tonight. Wes and I are hosting the program tonight. The program lasts from 7 p.m. to 9 p.m. And at 9 p.m., feel free to log off or come back and listen to the recording. But people actually stay on much later. And Wes and I stay on until really our voice breaks. So again, we look forward to sharing the information that we have with you tonight. We think it will be very, very productive. And we think the market is setting up for us and our style to really start broadening from a performance perspective. And also, we think that the seasonality and some of the things that are showing up are going to lead to a great second half of the year. Nevertheless, we do have a potential portfolio destroying event tomorrow with the Fed meeting, and we will also talk about that, and Wes will talk about that in his presentation in terms of the slide deck. So again, we wanted to welcome you tonight. Feel free to pitch in when you have questions, and remember, this will be sort of a dialogue, and we'll just basically have a conversation tonight and just talk about the market and talk about individual stocks and so forth. Hopefully, you'll be able to take something out of the program tonight that you can use. And again, these presentations for us just sharpen us and allow us to, again, to focus on what we think are the leading stocks, and we'll talk about those tonight as well. And right now, let me just make sure. Do you see, or do you guys see the Meetup page? Is that what you're seeing right now on the monitor?
Yes.
Okay, good, very good. Okay, a little bit about our Meetup group. You can Google us at Charlotte Investors Business Daily, and you can find us there. That'll bring you to the Meetup site where you can sign up. If you're not on our mailing list, Wes will drop a link and just fill that out, and you'll automatically be on our mailing list. You'll automatically get any type of comments or these types of presentations. You'll get that in your email automatically. So if you're not on our list and you would like to be sure and sign up. Okay, of course, we must go over the disclaimer. We will be talking about many stocks tonight. These stocks aren't recommendations. They're just information that's to be used for educational purposes. It's not to be construed as investment advice. Be sure and do your own research. If you buy any of the stocks that Wes and myself and the members talk about tonight. So this is not designed to provide a solicitation or recommendations or things like that. You must conduct your own research. So this is the acronym that we're all familiar with CANSLIM. Now, this came out in the 80s. William O'Neill conducted his research, and I believe they were for stocks through really, I think 73, if I'm not mistaken, like from the 60s to 73. And then Mike Webster continued to do research, and they broadened the CANSLIM acronym further, where they considered stocks maybe through the 80s even. But the CANSLIM acronym has stood the test of time. It has been modified to a degree because one of the biggest proponents that O'Neill came up with is that the current earnings were very important, and the annual earnings were very important. However, what's happened in the last 10 or 15 years is you've had a plethora of new IPOs. You've had many growth companies that did not have earnings for years, like Google and Amazon, Netflix, and so forth. So the formula has been modified to a degree. Also in the biotech area, you have many companies that that may grow and rise that don't necessarily have earnings now, but earnings are going to come later. So that's just been with the advent of the broad participation in IPOs, the growth companies that have come public. So just keep that in mind. O'Neill never bought a company, from really what I understand, that didn't have earnings. And occasionally some of your best turnaround situations don't have earnings currently. Some of the best performers, which are turnarounds, have negative earnings, and then they finally, and then they turn. Then, as the businesses reinvent themselves, new products and new services are added, then the earnings come. And of course, the stock price movement occurs as well, because there's really 100% correlation between earnings and the stock price over time. Not necessarily. We're not necessarily saying that in a very small time frame, but in the course of 1 to 2 to 3 years, if the stock is growing at 25% per year, typically the stock price appreciation is going to be 25% per year. So that's just a broad rule of thumb. The biggest profitable money-making criteria that you want to focus on, and particularly now, are the companies making new highs in price. And you should also consider those stocks that are making all-time highs in price. Nicholas Darvis had a small book that's been quite famous for traders, How I Made $2 Million in the Stock Market. And Darvis never bought any stocks unless they were making all-time highs in price. 52-week highs in price are extremely important, but it's even more important when you see stocks that make all-time highs in price. So that's something that you should be aware of and screening for. A bar chart gives you the all-time highs, that's great, and that's a free service. And then, of course, in Market Surge, you can see those stocks that are making 52-week highs just on the screen. It's automatically on the screen. So we'll pull up some of those screens tonight as well. We are looking for stocks that are leading, in the strongest industry groups as well. O'Neill found that the majority of stocks were attributed to group moves. And normally when you have a group move, you have one or two leaders. Like, for example, I believe Tom mentioned, Tom or someone mentioned Eli Lilly and Novo Nordisk, which we're long in. Those are two stocks in a leading group that we think are both fundamentally and very technically very, very sound. You want to buy stocks that have institutional sponsorship. You want Wall Street to be in your corner, or providing you with a tailwind. Now, a tailwind from Wall Street are buy recommendations. And, we've got plenty of buy recommendations in stocks, for example, like Nvidia, which is clearly the leading stock in the market today. And we think that Nvidia has much more upside to go, and that we're not close to making a top in that stock because of the earnings growth that's projected this year, next year, and the following year. So the numbers are quite robust there. And we don't think that the stock has anywhere peaked based on the fundamental earnings growth that is coming. Market direction. This is primarily the most important ingredient in this formula. As you know, in 2021, February 2021, growth stocks peaked. And then we had this consolidation. We made one more new high in growth in November of 2021. And then we had this brutal bear market that we've been digging out of from 2022, the 2022 bottom, in which the NASDAQ was down 35%. And I think the S&P was down 25%, I believe, at the low, or maybe even at year end. So we think the market is currently in a bullish uptrend, and we'll talk more about that as Wes reveals the indexes that we'll go over tonight. Okay, process overview. We think it's important to consider these three factors in terms of developing a process of your own. It's important to understand and observe and look at and be aware of technical analysis, fundamental analysis, and also the macroeconomic analysis. We think those three components are important. They're like a stool, and those are the legs of the stool that support your process. So we think if you begin your research in this manner, we think that can lead to successful events moving forward. Okay, the things that you look at when you hear about technical analysis, many pundits on TV, they talk about technical analysis. Of course, there are many people on Twitter. There are many books go over the fundamentals of technical analysis, the basics, and we think that everyone can learn from those because they're all really based on supply and demand and price and volume. So price, price and demand, that's supply and demand. That's what really moves the market. And it's as simple as that. And what you're trying to do is observe, when we look at charts, you observe various patterns and try to understand where accumulation is taking place and where distribution is taking place on a short-term and intermediate term and even long-term time horizons occasionally. So the MACD is a common technical indicator, the moving average convergence divergence indicator that we think is very relevant using. But most importantly, we think that the trend is most important. And for us to define the trend, we define it as the trend being in a short term, intermediate term, and long term. O'Neill and us and most of you on the call tonight are trend followers. That means that you're not getting out at the top. You're getting out when the market is rolling over. You ebb and flow with the market. So you have to adjust based on what is happening, with the indexes. We think that's really important. When the 10-day exponential average is greater than the 21-day, we believe the markets, as revealed to us, is in a short-term uptrend. The intermediate term is defined as the 21-day EMA above the 50-day. And of course, the long-term trend, the market has never been able to make any long-term progress unless it's above the 30-week moving average for 2 consecutive weeks. And in this case, we're in Fuego. All of those are lining up. So the trend most definitely is positive, and we are in an uptrend. In terms of understanding the strength of the market and how strong the market is, it's important to consider concepts like breadth. And Wes will bring you through a couple of these charts that we think are very important, including the percentage of stocks above moving averages, the advanced decline line, and new highs and new lows. The stocks making new highs versus those that are new lows, that's what we believe is that's the golden indicator. We think that the market can't continue to make progress in the uptrend unless, it's only healthy when the new highs exceed new lows for an extended period of time. And we've talked about this ad nauseum, in the last year and so forth. And we'll bring some interesting information to you tonight regarding that. Wes will talk about this National Association of Active Investment Management Exposure Index, which we think is important. Sentiment was getting a little bit frothy, and that's really come down, in the last week. And so it will be interesting to see what happens as the Fed conducts its policy meeting tomorrow. And that's going to be important, not just what the Fed does, because we know they're not going to do anything. But what we will gather from the meeting tomorrow will be the dot plot, and that's the projection of, I think there are 18 members on the Fed that are voting members, but we'll get to see how all the other members, what they're voting and what they're thinking in terms of the interest rate outlook, and we think that's important. Most importantly will be the conference call afterwards at 2:30. So it can be a wild day. Oh, before I forget, of course, we have the CPI that's projected to come in the core at 3.6, 3.5, I think, tomorrow. and versus 3.6 a month ago. That hits the tape at 8:30. That's going to be very, very important. Could be market moving, but again, how the Fed responds tomorrow in their comments and through Powell's remarks will be very, very important. And really, we think that the Fed is not going to lower interest rates, of course, tomorrow. There's no chance of that, but there's about a 50-50 chance that they lower rates in the September meeting. And so the question that will come out with tomorrow will be, will there not be any Fed cuts? Will there be one cut or two cut? But that's going to be based on, again, more information coming from the Fed, because they say that they're very, very data dependent. So that will be important to look at tomorrow, and that will be market moving for sure. Okay, a little bit more information on the fundamental analysis. In Investors Business Daily and in MarketSmith, IBD provides things such as composite rating, EPS rank, relative strength rank, sales margins, or return on equity. All this information is important and unique to what they provide versus, the Wall Street Journal doesn't provide any of this actionable data, any of this information that's so important in terms of screening your stocks. So this is a little bit more information, on fundamental analysis in CanSlim. Again, IBD has many tools, many tutorials, many training tutorials that we think that are useful, and so we encourage you to do as much work, using those tools as possible. Of course, it only enhances your process, and it should help your results. And of course, macroeconomic analysis, we follow Hedge Eye Research, which does a great job in terms of looking at the macro situation. However, the macro situation by itself leads to many whipsaws, false signals, and it's important to be aware of that. So certainly a macroeconomic variable such as interest rates and what the 10-year does and what the short-term bond rate does is very, very important. The GDP, of course, the growth that the whole economy grows at, that we think that's very important as well. But what is most important is the action of individual stocks and how individual stocks are acting. Currently, there are many individual stocks that are doing well, but we're still in this magnificent seven type of environment. We saw Apple had a great move today after selling off because of a disappointment by the street, actually, yesterday, and the stock was down after they announced their initiatives. It just kind of it didn't respond. The stock did not respond positively at all, and then it just surged today to new highs. That move today at new highs, we think it's very, very important. We think the stock goes higher from here. It's been a laggard. It's been one of the worst laggards, not quite as bad as Tesla, but you did have a sell-off there while the rest of the growth stocks, continue to move. The Magnificent Seven stocks continue to move up, but now it's coming and getting in phase as well. So we think that's important. So if you do some research with a Hedge Eye, you'll see that they have something called a Quad 1, Quad 2, Quad 3, and Quad 4. And basically, they'll just give you some information about the macro on industry groups and cyclical analysis. style factors such as momentum, variability, and so forth. So you can check those guys out and see if they provide you any useful information. But the most important thing that we're looking at that you want to focus on is just simply price and volume.
Roy.
Yes, Chris.
Yeah, quick question. Nvidia, you mentioned earlier like how strong their earnings growth is projected out, right? And
that's right. Yes.
And who to doubt them that they wouldn't hit it? I mean, you might as well give them the benefit of the doubt that they are gonna hit it. But what that said is everybody seems to know that, and seems like everybody should that was waiting on the sideline should be in now. Now with the split, what previous history tells with the split, what previous history tells me, institutions usually take a chance to sell their shares at this point of time, judging by history. Like they seem to unload a lot of their shares on retailers or whatnot. With that said, could you see like a short term where the stock doesn't move or like kind of bearish at the moment? What's your perspective on that?
Chris, let me just say Nvidia is the leading stock in the market today. And Nvidia, and we'll pull that up, earnings are going to be up above 30 this year, $2.54 next year, $3.42 the following year in 2026. And when you go back and you study, like you study Qualcomm in 1998 to 2000, you study, again, the Tesla top in 2021, you study the top, for example, the Zoom top and Teladoc and DocuSign. You study, you look at, well, how these major stocks did in the past and what what the patterns look like today. And you just try to piece that together from a fundamental perspective. Nvidia's, their market share is unassailable. And what it's, this exercise shows you, it demonstrates the difference between owning Nvidia, the #1 stock, and #2, which is AMD. And the performance difference is astounding. And normally, you normally have that type of difference between the first and the second. But it's like Coke and Pepsi, or it used to be AOL and Yahoo. And so you want to have more than one. And the semiconductor space, by far, is the #1 group that's going to benefit from AI. And we'll talk extensively about AI tonight. But regarding the split, if you go back and you check, Google I believe, had a 10-for-1 split, and maybe Netflix, Google had one, and I'm not, some other major cap stock, major growth stock had another a couple of years ago, and I'm trying to remember who it was other than Google. But you can but it's important to study when that split took place. Where was the position of the stock then? And here, when you have a 10-for-1 stock, the Qualcomm top was marked the day of the 10-for-1. That was the top. Here, we have such a long roadway in terms of the fundamental earnings growth that you would be surprised where the stock can go before it blows off. So the stocks typically blow off right before the peak or right at the peak of their earnings growth. And we don't think that this stock is close. Now, it may be able to base, it may go parabolic from here because everyone is got a profit in it, and it is one of the most valuable companies on the planet. I think you'll see it. I think you'll potentially see it leapfrog Apple and Microsoft, in the next year or two. But that's just sort of a foretaste of what's to come tonight. So we will talk about that on the second half of the program. And with that, let me turn it over to Wes to take us through the rest of the slide deck. And enjoy this. And I'll be back on in about 30 minutes or so. And we'll talk about individual stocks and get acquainted with a game plan that we might put in place as early as tomorrow. So with that, let me turn it over to Wes. And Wes, go ahead.
All right, thank you.
And let me stop sharing.
Yeah.
There you go, Wes.
Thank you. All right. Yeah, we'll get moving through these. And I added this first slide. Do you like apples? If you guys know this from Good Will Hunting, do you like apples? This is when he gets the girl's phone number. He says, how do you like them apples? So am I sharing? Actually, did I share?
Wes, we do not hear you. I don't anyway.
I got you. I can hear you. I can see it.
Okay. Whew. Okay, that's good. All right. Anyways, yeah, so big move obviously in Apple today. It was pretty massive, and it's a bit surprising to see this old dinosaur.
Wes, I don't hear you. Do you guys hear Wes?
Yes, they do.
Yeah, I am.
I can hear him.
Yes, I do.
We hear him.
Yep, we do.
Apple
All right.
chart on the.
Yep.
Yes, I can hear him.
Thanks. Yeah, thanks. He'll figure that out on his end. I don't know what happened or what's going on there, but anyways, of course, big news here. AI, all that.
Okay.
Maybe there's the super.
Wes, I don't hear you. So you just go ahead and I will catch up.
Okay. Yep. So, anyways, big deal. Second biggest company in the world right here. And they were just recently third after Nvidia patched them up maybe earlier this week. And it's important, right? It's obviously important when huge important stocks in the market are making all-time highs. And I think people were concerned obviously about this stock. We haven't touched it at all for the last couple of years, but people thought they weren't going to be a big participant, but I guess they've gotten rid of some of those fears. So overall, good for the market, but clearly it propped up a lot of the indexes today. And hopefully we can see some broadening out, and we'll talk more about that. The potential to broaden out here, because the market's got to do one of two things. I think it's either got to broaden or it's got to come in significantly, because it's clearly been narrowing this whole way up, and we know that's not the sign of a super healthy market. So here's a look at some cycle stuff. This is taken from Ned Davis Research, and this is this average cycle work where they talk about the typical 1 year, the 4-year presidential cycle, and the 10-year decennial cycle. So they talk a lot. They combine those three things to make this sort of standard looking year for the market. And so here's the market in orange currently through this was through May 31st versus the typical year. So now we're in this stronger part really in June. We're approaching right in June, and things pick up for the next few months, and we'll go over a few
MP5B.
a few other things that show the cycle kind of hitting possibly a real positive part of the cycle here. Here's a chart of just looking at the 4-year presidential cycle. So what we look at for a typical election year is right here in gray, highlighted in gray. We actually did have a good start to the year despite this sort of choppiness you might expect in the first 6 months. But now we're approaching that part of the summer where the market could pick up in a typical election year. And then you'll see there's this pullback you might experience in September and October, leading up to the election. Sure, jitters, right? Everyone maybe jockeys around as everyone thinks the world's going to end. you know, depending on who wins. So, anyways, we're here and we think that, you know, we're entering this really positive 12-month period. You can see it continues beyond the election into next year, but based on that cycle. And here's a look at the actual monthly data. Again, we're entering that June, July, August period, which is a real strong 3-month period. I guess it's the strongest 3-month period in a typical election year. And it's kind of come on schedule. You know, we had that pullback in May, and now we're at new highs in the indexes. And like we said, you know, we'll talk about, you know, why we think it's more likely to broaden out from here. But yeah, so, you know, that's what we do like to have this seasonality. Of course, every month or every year is different and unique and everything, but it's good to know that we have this potential tailwind. So I think the last few months we've looked at the NASDAQ, you know, in 2003 and 2009, and we wanted to talk about, okay, after a prolonged bear market, you know, when are we going to get that pullback, right? We were waiting for that pullback, waiting for it. What does it look like? And we were talking about how it's like a 6 to 8% pullback, and we ended up getting that 8% pullback just a couple months ago. But this is looking at these 3 years, just a performance line chart of 2003 in purple, 2009 in blue, and 2023 in red. And then this green line is the follow-through day that we kind of consider as marking, this green line marking the end of the bear market and the follow-through day that spurred the bull market that followed in that year. So this was November 1st. Well, we probably remember November 1st of 2023. And then you can see you can go back and look at these other dates, but 2009 and 2003 here. So this was taken from IBD. They showed this chart, and it was 151 days following that follow-through day. So we were up 32% on June 7th from that follow-through day in the NASDAQ. And compared to the other years, that's actually a little bit behind. You can see in 2009, we were up 52% following that follow-through day. And then in 2003, we were up 37%. And now you can see in the next 100 or so days following that, you know, you do continue to possibly see some more momentum. So just because we're up 32% in this bull market, it doesn't mean that that the run is over. It's certainly a great start, but coming out of a really rough, prolonged bear market, there is potential for more, you know, more momentum and more gains, we think, later in the year. So keep that in mind. Keep that in mind that even though we're up so much, we're all-time highs, you don't need to necessarily, you don't have to make any conclusion that this run is over. And here's a look at the Russell 2000. I went ahead and added this in from what they had shown, just because I know the Russell has been kind of a laggard, right? It has been a laggard over the last 6 months or so, at least. And that's a theme, right? There's not a whole lot of participation, and you know, compared to these other years in 2003 and 2009, you can see there's a lot more significant underperformance in the Russell this time around. So, you know, there's clearly the haves and have-nots at this point in time. And it's pretty substantial. So, you know, the catch-up play has been, I know it's been widely anticipated. And you've gotten a few false breakouts really in this. But, you know, one of these times it's going to change, that the breakout's going to be real, and this thing's going to, is going to participate in a really meaningful way. And there's going to be a lot of catch up to happen. Okay, and so now we'll talk a little bit about the economics and everything of what's going on. Very broadly, we look at this a little bit. This U.S. leading economic index continues to show a bottoming and turning up. It's still not positive on a year-over-year basis, but it appears that the bottom's in from this perspective. And could be a tailwind, should be a tailwind if the economy can actually continue just to grow in a moderate pace. That should be good enough to have a decent market. Okay, and of course we have CPI tomorrow. We have the May number coming out, and so the number I have to expect tomorrow is about 3.4%. That is flat compared to last month. And then we have June coming in, maybe 3.3%. So if we get a flat to slightly down number, I think that should be viewed positively by markets. I would expect that to be received well. And we've talked a little bit about this too over the prior months, but you've got this comp coming up finally for July, August, September, where it should be a little bit easier. And you could actually see some more meaningful, I think, a little bit of a step down in the CPI number in July and August, just because of that comparison that is actually becoming more favorable for the first time in several months. And we know the overhang kind of recently in the last domino to fall in CPI is wages. These have been pinned kind of high, above average historically. You've got average hourly earnings here in red, and you can see the long-term average, let's say over the last 10 years prior to all this COVID mess, was maybe 2.5%, and it was a little bit higher there, right, in 2019, 2018, with a tight labor market. And so now we're sitting here at about 4%, slightly above average, but not a whole lot to really go there. We're talking 0.5 percentage point, but very slow moving. And the Fed has more recently said, okay, we're not going to we don't want to force any undue pressure on the labor market. They do want to have continued restrictive policy, but at 4%, I don't think they're just going to hammer the economy to prove a point and get inflation down to 3% or wage growth down to 3% in 3 months. They want to be careful, with the risk balanced, really. And let's see. So just this was a chart that kind of Vinny showed, and I thought it was a good illustration of what we've been dealing with over the last six months. It's kind of a recap of where we were at the start of the year and now where we are today. And this is the path of the Fed funds rate today and expectations going forward for the rest of the year. It's just for 1 or 2 rate cuts. And if we were to be back in December 31st of 2023, you would have seen, the aggressive path that markets were all pricing in for the Fed funds rate. So clearly, we've come a long way. Nothing has come to even close to what the market expected back then. And so it's just, it's a funny thing to realize how wrong the markets can be compared to reality. So I think that's helpful to know, and that's why you can make money in this too, because that's a real big discrepancy, and that some probably could have and some probably did find in the market. So interesting there. And then here's just a look at the 1 and 2 year for the treasuries, the 1 year here on the left and 2 year. This is just, it kind of reflects the path of Fed policy. So we include that there. We continue just to chop around this 5% rate. So not a whole lot of conviction that there's cuts coming in the next 1 to 2 years being priced in the market. So, that's something to consider too when you're thinking about how people might be positioned for the Fed meeting tomorrow. There's clearly not a ton of expectation now. So there's not aggressive expectation. So if you were to guess which way the market would be wrong this time, it might be that they cut more aggressively in the future. But so I'm just saying there's not, this is clearly not much of an expectation at all for rates to come down meaningfully over the next 2 years. But here's a look at the 10-year rate too, and we like this one to track on a daily basis too. And it continues to chop around. I don't think there's any high conviction. You know, it's easier to look at this as if it's you want to trade it like a stock, but it's chopping around. It's kind of a mess. It's jumbled underneath the 50-day. It's kind of trendless at this point, right? So the market's trying to figure out what's the right rate to be there. But I've talked about this too before, where this is kind of the it's the accelerator of the economy. It's also the brakes. So, you know, well, you know, it's good to have this mechanism in place. It'll work its way to the right place to get us to get inflation down, but also at the same time avoid a recession. And so, you know, we're in this kind of no man's land of rates. We think at this point, and you know, as long as we can just have some consistency and some, you know, less worry about more new highs in rates, then the economy should be fine. And stocks, you know, should act right, we think, to reflect that. And you can see the FFTY, which is the stocks that we traffic in mostly. This thing, you know, obviously had that pullback with the market, bounced back, is now kind of working on a handle on the right side. And, you know, waiting for a catalyst to take us in either direction. So FFTY not acting so bad now. You know, we're encouraged. It's in an uptrend. It's above the 50. The 10 days above the 21 day. All these things we talk about for short and intermediate term trends are looking just fine for the FFTY. So here's the NASDAQ and the MACD. We did have that crossover down here in early May, which ended up being, you know, a good signal to buy from down here. And we've seen that improvement in the market follow through and carry forward. So nothing alarming here. You know, we're not extremely overbought by any means. We just made an all-time high today, and you know, there's potential that it's going to be difficult to get in too with indexes going higher like this.
Wes, let me point out a couple of things back on the other chart. Let me point out a couple of things, guys. First of all, the market is in this power trend that Mike Webster coined that phrase, and you can go to IBD and Google power trend to see what's the makeup. How do you make up that index? We think that's useful, but we were in this power trend until April. The power trend ended in April with that very nasty 5-day pullback. And during that nasty pullback where we were down, let me see, 1, 2, 3, 4, 5, 6 lower lows. During that period of time, we, along with many other people, got shaken out of a number of names. We were bending with the market. And again, that's the, I mentioned to you before, trend following. You never get out on the exact top, but when you see an abnormal occurrence occur like this in April, you had to raise cash. So we were 100% long that we probably went all the way down to 30% invested, maybe 20. And then when the market reversed, we increased our exposure. We're currently 90 to 100% invested currently, but the power trend re-engaged a few weeks later, and so we're back in this power trend now. A few days ago, 1, 2, 3, 4, 5, 6, 7, 8 days ago, we had this massive reversal, and this was a intraday reversal right there. And it looked very ominous, like right there at the low that day. It certainly looked like the market was going to retest the 50-day. And I don't recall why the market sold off, you know, during those couple of days. It probably had to do with some economic results or what have you. But what the market has been doing, it's been opening weak the way that it opened that week and closing strong. So that's just the opposite of the environment that we've been in for the last few months. So we had this subtle change. It's just a subtlety change where the market opens down and buyers rush in. And that's when that occurs, you're in a very strong uptrend. So it's going to be interesting to see what prevails tomorrow. Will the market, crap out, or will we gap and go higher? But we do think that based on the seasonality, based on earnings growth, based on where interest rates are, the market on the second half of the year is going to perform great. So tomorrow's report, even if the report is bad or down, observe how we close and observe what happens over the next couple of days, because if the uptrend is intact, institutions will be buying weakness tomorrow if that in fact occurs. But we have, you have quite a bit of leeway there from today's low and today's high, and also where the 10-day is. The market should hold the 10-day. As long as the market is above the 10-day, it is in fact healthy. And if we get through this day tomorrow unscathed, we could really start to have some fireworks to the upside.
All right. Yep. Yeah. And that character change you mentioned, that's definitely was noticeable that day right here. And I know the last 2 days as well. Same idea where we're making a newer low here, a lower low, and yep. So definitely seen that.
And Dan
okay,
made a good comment, Wes. Dan made a good comment. The market has been mixed, and we'll talk about that when we look at the breadth. We are seeing, certainly, I think the last 2 days new lows exceeded new highs. It's not worrisome yet, but the market is, it's rather thin, and the next major move up will probably be predicated on more stocks participating. We will see. But in the meantime, if you identify the leading stocks, then that's going to keep you in the stocks, even if the breadth continues to be narrow. So it's important to know that I think 10 stocks in the S&P, the top 10 stocks in the S&P account for 36% of the change this year. Only 10 stocks, so that is quite narrow. But but if you on those 10 stocks, you should be making progress right now. So
yep. And you definitely can't ignore Apple anymore. I mean, I don't.
Yep.
Yeah, that kind of moving. Yeah. Okay. So yeah, we will get into breadth here, and because that's the biggest issue, I guess, with the market right now. This is the percentage of stocks above their 20-day moving averages. We use this just because they have it on stock charts. We know Matt Caruso uses the 10-day, so percentage of stocks above the 10-day to use his very, very short-term oscillator for that. But this is there's a little history of this on stock charts, and so if we're looking at this pullback, if it was just like a January pullback, the breadth should stop deteriorating here and should improve, right? When it got worse in April, it got real ugly. But it's possible that we just have a very, garden variety pullback, not even a intermediate term pullback, right? This 3% type of move. And then that move lower could be over based on this breadth reading. But if we look at the stocks below or above their 50-day, next we see same story. It's not even 50% of stocks that are above their 50 days. Again, we do want to see that improve, and then stocks above their 200 days, however, continues to hold up pretty well. And this is fine as far as the 70% or so level, right? When you get to something more like 90-95%, you need to be a little bit more cautious. But right here, I think this is on a long-term basis. Things aren't frothy. Things are not super weak. So that seems fine. We'll look at the NASDAQ and percentage of stocks above their 20-day as well. It's saying the same story, right? It's hit that January level. We had that real good rally for 2 months, real shallow pullbacks in the indexes. And so, we got one pullback in January that saw a little bit of weakening on an individual stock basis. And, I think we're more likely in that situation right here. And when we can then take off to the upside again for another few months. And with some broadening out. And yep, same thing here, right? You can see, I mean, the rally, we consider this the start of the bull market, November 1st, right here. And when the rally really kicked into gear, we were coming from a place of 20% of stocks above their 50-day. We're at 40% now. So, naturally, you would think if we're going to get a continuation of this rally, we're going to see that improve again from this 40% level. And then, stocks above their 200-day in the NASDAQ sitting here at 41%. The indexes have been able to make, progress below 50%, but of course, we'd like to see that improve to something above 50%. And, time will tell, but if these indexes keep going higher, we're most likely going to see some change there. And okay, more kind of negative breadth readings and sort of divergences here. We're seeing we're making net new lows. So down here, when we've got this red reading, we have more new lows than new highs. And despite that, the indexes are making higher highs. So again, we realize it under the surface, absolutely. But a number of leading stocks are holding up. And action like Apple can't be ignored. You just you may just need to buy some of those higher quality things. It may not be time for the small caps to rally. Time will tell, but obviously everything can change very, very quickly. It could change tomorrow. We could come in here and see 100 net new highs tomorrow, and things. There might be a plethora of setups over the next 5 days. But we'll see. We are aware, of course, under the surface, the rally has been certainly lacking participation. Here's a longer term look. We talked about how, okay, we've been through this really 2-year bear market and seeing some improvements in that net new high number. And, it's been actually investable. So still, looking for this to continue on, this net new high number to continue on. And we really just made an all-time high in the NASDAQ just within a month or two. So, if that's going to keep going on, if we're going to keep making new highs in the indexes, we're going to keep making more and more new highs in stocks. So, yep, just want to see this. Would love to see that improve and have an easy dollar environment. We're going to have an easy dollar environment only when we have a abundance of new highs outpacing new lows. And here's a look at, okay, the New York Stock Exchange index in a little bit broader basket, right? It's not so tech heavy in that index. So you can kind of see why, okay, yes, the NASDAQ's making new highs. Well, it's clearly been propped up, one by Apple today, Nvidia and whatever, all the other, large cap tech stocks propping that up. Well, this is a broader basket and has not had the same progress over the last 5 to 10 days. Okay, and this is the oscillator we check on a daily basis for if we're overbought or oversold. We were oversold down here at the end of May, and we did have the indexes bounce right there, which is great, and timely. What's interesting about this, I think, to point out about this oscillator is while we're not oversold right here the last couple of days, the last 2-3 days, intraday we do follow another oscillator that updates regularly, and if this doesn't update intraday until this updates at the end of the day, this particular stock charts oscillator, but intraday we certainly have been oversold. I know the last 2 days, I know Monday and Tuesday, we've been very oversold at the opens or somewhere intraday, and we've rallied. So that's why this reading doesn't show that. But that's kind of been, the character change we talked about, right? We're opening oversold and we're closing kind of strong. So, that's just a little intricacy about this oscillator data point. And so here's the NASDAQ, and again, same thing I would expect, right? Where we have been intraday, we've been pretty oversold in this negative 40 plus territory. But since we've closed higher or closed near the highs, you haven't seen that reflected here. So we've been oversold. We've snapped back. There's clearly been support from index or from institutions buying those dips at the open. Okay, and here's the VIX versus the S&P. We continue just to think that we're in the investable bucket, we would call it, of volatility. Nothing to really add here. We had that spike to 2020. Something Nvidia's talked about for a number of weeks or months now, even, is how long of a streak we've had since the VIX maybe doubled. And so, that still hasn't happened. So we haven't seen a real big increase in fear with any of these pullbacks. But I'm not sure what to think about that. Either way, we're sitting here. It looks like we're in this regime of lower volatility right now, and it's been tradable. So that's all we really care about. So we'll get more into sentiment too. This is Roy mentioned the National Association of Active Investment Management. And so this measure down here tells how long institutions are, or how long active managers are. And we actually had that number come down quite a bit last week. And that was despite indexes making new highs last week, right? I think we closed at the highs of the week. And, that's a welcome thing, right? We were talking about how sentiment could be getting frothy and all that. And this has done a really good job. We've called out in the past at the end of December, prior to a pretty nasty pullback in some stocks. And then in March and April, when it exceeded 100% long, that was a warning sign of a pullback that was imminent. So, we're happier to see this at 69% instead of hovering in the 90s, high 90s, following last week's action. And similarly, last week you did have a little bit of I would call it an improvement in bullish sentiment. So you had that come down from 48% to 39% in bullish, and then you've had the bearishness pick up a little bit, sitting at 32% now. So, these things that we were kind of worried about, absolutely, having excessive bullishness, you always want to be aware if you're in that environment, right? You need to, your antenna needs to stick up and think, okay, well, it's time to consider, or be prepared, right, to take defensive action. But I think some of these things have improved over the last couple of weeks where you don't have to worry so much about that at the moment. And just here's a long-term chart of that AAII bullish, bearish sentiment, and the net number being down here. Net bulls being in blue, net bears being in red. So you can review this whenever we send out these slides, if you would like. Here's a look at the put-call ratio, another measure of sentiment. So right when we see a high put ratio to call ratio, that means there's some fear, and then if there's a low ratio, of course, there's excessive optimism there. So again, just like what we were talking about with the bullish and bearish sentiment and the active investment exposure index, we were kind of concerned 4 weeks ago that we were getting in that sort of excessive optimism level. And you can see that reflected here in the put call ratio. We were getting in pretty low levels. Of course, we can go back lower. If you look at the 2020 and 21 bull market, we were much lower than we are now. But compared to the last couple of years, we were at near lows in that fear index. So something to look at. We did get some pickup there, which again was welcome just based on all the sentiment readings we were seeing. And this is the equity put call ratio. Same idea. Had a little pickup. We're chopping around. There's not a whole lot to say about these at this level, but something we're always aware of. Yeah. Okay, and I just got a few more here just to highlight high yield spreads. This is what we always look at for the credit conditions. If this is increasing, then there's a perceived increase in potential stress in the credit markets. For now, continues to just say the benign credit environment, and nothing to worry about. But it's something that could lead equity markets. It depends. Sometimes people think bond markets are smarter than equity markets. So we do look at this. We always want to see if this is being confirmed by credit markets, or if there's something equity markets might be missing, it might show up here. So again, we always include this, but continues to be benign based on this spread measure. Okay, and now we look at Bitcoin. Bitcoin, of course, we know we're bullish on this asset class. We think we think with taking out these highs, right? 72,000 is these highs, and maybe all-time highs about 73,000. There's a good chance that this works. It's consolidating. We had that pullback and shakeout down here, reversal, retaking the 50, and we just had this other little shakeout. We think, taking out these lows here, bouncing at the 50-day, possible last shakeout before you finish the handle and make that move up. So we're still bullish on Bitcoin for sure. And sure, you could have had a position here, breaking the 50, and sit through some of this this choppiness, but you need to be probably ready for Bitcoin to take out 72,000 and be off to the races. Okay, and lastly, I just threw in oil here. Oil being the most important, I guess, chart when you're looking at real-time inflation expectations, right? Because that everyone just looks at this and assumes, since oil's in everything, energy's in everything, the direction of oil will be the near-term direction of inflation trends. So, wanted to put this in there. We did see oil break down hard, and now you're getting this bounce back. I don't know, trendless still, in my opinion, nothing really to do, but it's a welcome change from April, where it was making several months of higher highs, and now we're making lower lows for the last 2 months. So welcome change, and something to consider when you're, if you continue to have these inflation fears or about inflation popping its head up one more time, keep an eye on this. And it's possible that this thing goes and 85, 80, whatever, 88, who knows. But just be aware of where oil is trading, because that should give you some kind of idea of what the market could be expecting for inflation over the next couple months. And of course, it's more real time than waiting for every CPI report, which is a couple weeks after the month end. Okay, and that is all I have for you guys now, and I can stop my share here and hand it back to Roy. Thank you for listening.
Thank you, Wes. Let's get straight into the market, to the stocks, because we know that most of you are here for that. And let me share my screen, and we're just going to now just feast on all these stocks and all these setups. And to start it off, I'll show you what we own personally right now. And you can do a screenshot of this so you can take a look. Let me share my screen. Now, do you see the screen, Market Smith? Is that up on your screen, guys?
Yes.
Yes.
Yep.
Okay, fantastic. Okay, we currently have 15 positions, and these are in alphabetical order right here. So I'm just going to go through the positions and briefly just, this is an abbreviated session, so we can't get into all the fundamental reasons, but we will take a look at the technical picture, and we'll go through many different stocks here, and we'll go through stocks that we own that are on a focus list, and then we'll take questions from all the members. We're looking forward to going through with all your inquiries. So GE Verona is a spinoff from GE. As you know, AI is going to revolutionize things. The two biggest proponents, the beneficiaries of AI, they're going to be software companies and semiconductor companies. And also, along with the build out in terms of the data centers, and from the information that's coming out from the CEOs of all these companies, there's an obscene need for power and electricity. And we all know the grid needs to be revised. We need to add more. We need to improve the grid. We don't have enough electricity in our country to fuel the EV mandates that are out there. Our grid system is antiquated terribly. And so you're going to have companies that specialize in energy and power that are associated with AI and the data centers that are going to thrive in this market environment. GE it's really a turnaround situation. You can see they've got 4 straight quarters of negative earnings, but it's really a turnaround situation. On Market Surge, you can see that we have this earnings growth, but that's from a negative perspective. So if you were waiting for the company to have profits, it's at the earliest it's going to be this quarter, and yet the stock has moved higher from the opening IPO to where we are currently. So what has our attention is that if you go to these websites, to the company websites, you can see all the different you can see how broad their product mix is. And we think that GE is positioned perfectly for the build out in for electricity, power, data centers, and so forth. Notice the size of this company. It's 46 billion. So, it's not a tiny company. And notice where they're doing about 30 billion in revenues. So it's an IPO. The IPO was acting perfectly until the shakeout that we had 4 days ago. We did have a shakeout in VST. We'll pull up VST, NRG, CEG in that space. But GE is setting up. You had the little shakeout. From a trading perspective, we exited this 4 days ago on our trading accounts, our position accounts, but we held it in our core accounts because we're trying to hold these stocks for 4 to 8 quarters if they perform. And this stock, after this brief shakeout, could be on the way to taking out its highs again. Earnings are in 43 days, so we've got plenty of time here. So this might be one that you could take a look at, tomorrow if the market environment is favorable. Robinhood, we know the Robinhood story. Robinhood is going from a very tiny company to really a legitimate enterprise in the investment, in the brokerage area. You can see where the stocks made a 52-week high after this nice this earnings, not earnings, but accumulation here with volume and price, where the stock made the right side of this cup. And so that really gave you an early entry. And I think we're in this stock under 20. I think maybe in the pullback right in here. And then you can see it broke out to a 52-week high. This is a picture perfect chart with the 98 relative strength. You can see the relative strength line making a new high. Notice the earnings that are expected this year, 228% and 1% next year. By the way, let me just back up. Look at the earnings projection, see on this GE. Remember, O'Neill wanted just 25, and the CanSlim model is based on 25% earnings growth. Many times, the stocks that we're looking at and that we think you should be looking at have triple-digit numbers. You can see that GE is expected to have 235% earnings growth in this year and 74% next year. So you have a nice increase from this year to next year. So that suggests that this stock should be higher, over the next year. Back to Robinhood, picture perfect. This was a pocket pivot. You've probably heard that term. That's really a term that was, I guess, Gil Morales coined, where the stock is, it has a big accumulation in the base before the stock breaks out, which really signals a change in trend in many cases. And so, you observe, that's why it's important to look at your stocks every day, to observe, to see if the action is abnormal or normal. IBD, which is this is our second most convicted investment, other than Nvidia, and as you're aware of, you've had many different investment houses and Wall Street firms that are forecasting a Bitcoin price of 150,000 shares in the next 6 months to a year. And when an asset class gets into a new high like this, an early asset class, and I would encourage you to go back and see when gold and GLD, when they launched that ETF and what happened subsequently afterwards. That's important to look at. But this is an ETF from BlackRock, and I think about 7 to 10 companies came out with the Bitcoin ETF. BlackRock and Fidelity are the biggest by far. Well, GBTC was, but they're much more expensive than the others, and that's why we favor IBD, because GBTC is charging 1.5%. IBIT is charging 1/4%. This is, when you look at this stock, and Wes, you can see from the slide deck, we came back to the 50-day, and what's actionable, and when we're looking at a chart like this, is breaking the 50-day in terms of bending with the market. I think, we sold some stock. We sold some stock here, the break of the 50, and maybe sold some here, and but we put the position back on the reversal day right here, the big reversal day. But this is a picture perfect base, and really what you want to see an undercut, like the undercut that we had today, the shakeout. That's a shakeout, and many times those shakeouts lead to higher prices as you've washed out and you've got rid of the weak hands right there. So this is setting up beautifully. It you took out that 4067 pivot, And then, you've got a pivot right there, 41.20 and 41.99. At 42, really game on. So this is one of our larger positions. I think we probably have a 15% position there, maybe 15 to 20 in Nvidia, but a break of 42 and game on. And we think that when this, when it makes new highs, you can see just the momentum, and really you can have some aggressive money that, that they're going to be forced in right there. The shorts are going to have to cover. So it's really setting up perfectly. And what you would like to see, you'd like to see the stock rally for a couple, for a few days, come up, come up here and build this right side a little bit, and then take it out, take out that high 5 days ago. But, we think that this is an $80, it's an $80 equity, really 6 months to a year from now. And it could be much more than that. We're not going to get into the game of saying Bitcoin's going to $1 million, but we do know that this is the biggest raise in inflows into an asset class in this period of time that we've ever had, period. And so when you see the stock get to 42, it's going to be game on. We wouldn't be surprised to see the stock, at 80, $80 to $100 1 year from now, particularly, if this uptrend is intact and so forth. So it's one of our most convicted ideas. Now, if it breaks down, if the stock would break down, we'd be forced to trim and sell, but we're just going to see if that's the shakeout that sets the stage for the next move up. It tried to go four days ago, came in, and we'll see if the second time, if it gets through there and works. Kyndryl Holdings this is a thin stock. It's probably one of the, it's interesting, it's one of the largest stocks in terms of conducting business that's cheap, that no one's ever heard of. So it's doing 8, 12, 16. This stock's doing $16 billion in revenues, and yet the market cap is only 5.9 billion. So you've got a stock. This reminds me and reminds Wes. We've been talking about this, of course, for quite some time, of VRT, that when we bought that, it was very, very cheap, unknown, but the numbers were just terrific. And look at the earnings growth that's expected to be next year, up 1,452%, and then another 57% the following year. And we think this is very, very early. There's your earnings breakout where the stock traded higher than 10% that day on the earnings move, and volume was up on that day 321%. So you had a stock. You had a stock.
I was just asking if you could show it on a weekly chart. I'd like that.
Sure, of course. There's the weekly. And so, it's coming in 4 weeks. It's trying to reverse today. Wes and I think that somebody made a mistake 3 minutes before the close 2 days ago. And when we take a look at that, we'll take a look at that and show you what that looked like, where 300,000 shares were bought right here, right before the close. And then it was sold on the open today. We think somebody made a mistake. And let me go to the 10-minute so you can see this on the 10-minute. So it took out this 26. We were looking at 26.92. We had an alert there at 26.92. That's the level that we're watching. It's got to get through that level right there, 26.92. You did, but then they sold right into it, and then they sold. We think somebody lost $500,000 on the trade. They hit the wrong button, and then they got out. And so you're seeing that reversal off the low today. but it looks great on the weekly. And look at the numbers here, the earnings that the company has enjoyed. This was a spinoff of IBM, and they're in the consulting area. So it's it's in a nice area. The group's somewhat out of favor, but we think it's very, very cheap. And these numbers are very, very attractive with a price to sales of like under 0.5. This is just you just don't see these companies come along, but it's not trading very active. It trades about $50 million a day. So you need it for it to reverse here. You can see where it took out that alert. That's really what you should be looking at. If you recapture that 2692, that would be very, very positive. So that's where you want to see the stock go before you can clearly say that, okay, the next uptrend is beginning. So be sure and watch that. The next one would be
sorry, Doyle, what level did you set on Kindle to watch out?
What's that? What was the question?
What level did you say on Kindle to watch out for?
It's a buy. It's a buy right here, and
Okay.
using today's low as a stop. And then, but it's so thin. This isn't going to be a go-to stock tomorrow with the Fed meeting. We're going to look at stocks like that we don't own, like Lam Research, ASML, VST, NVT, Kava, Coinbase, MSTR, GMed, Vertex, Regeneron, MMYT, ELF, ANET, Meta. These are stocks that can, Coupang, Regeneron, SMCI, that can go tomorrow if the market is in tune, if the market's in phase, if the market's good. Okay, the next one, and we've been talking about Eli Lilly for a long time. We've got a nice position here and in with Norvo as well. Obviously this is the GLP-1 drug, although they just got approved for Lilly's got a big pipeline. They got approved for an Alzheimer's drug today that's going to be impactful in their bottom line. But you can see this stock just broke out, and we actually owned this stock and sold it, but we came back and bought it back later about a month ago because they reported their quarter, and it was mind-blowing. And it is just beginning for these drugs. We think that these weight loss drugs can be as impactful as the cancer drugs that are out there. So, and we think that these are, this is going to go on for a long period of time. There's probably not a person here on the call that doesn't know anyone that's on the drug. And I'm actually on the drug for diabetes, and I've dropped a lot of weight, and I'm no longer diabetic. So I'm thankful for that. But you can see the stock, Wes called it a whale, where, it's tough to move these whales. It's like the Titanic, it's tough to move these big ships, but, as long as they're performing, they're going to, they will have some sustainable momentum. And you can see that this stock clearly broke out at 800. Now it's at 865, and it's on its way to 1,000. This stock should certainly be 1,000 by the end of the year. So everything's going great. The quarter was great, and they've got great prospects. Melly is an enigma a little bit to us. It broke out, had a great, not to all-time highs, but there's your pocket pivot on earnings. And what got us, you got somewhat of a lagging relative strength line, not great. And we bought this stock about 5 days ago. But what's got our attention, our investment thesis is this. This is the Latin America Amazon, if you will. That's to just, use that vernacular. But this is what's got our attention. Earnings last quarter, you can see the last 4 quarters, up 71%, flat, up 180%, up 112%. The stock is trading at 1,600. Earnings are going to be $34 this year. And the stock's at 1,600. The last time that it was at 2,000, the high was 2,000, and the stock just did $1.67. It actually lost money, and the price was 1,700. 4 years ago. Now you're going to do $34 this year and $46 next year, and the stock is under the prices under these levels where where it was 1,700, 2,000. Going back 3 to 4 years, we think this is massively underpriced. So it's bouncing off the 50-day. It is actionable, on a move up. So it really needs to, it's really in no man's land. If you trade this, you would consider this as the danger point. So, if this stock turns here, we think it can. It's very attractive, and we'll probably press this position if we see this stock turn right here off these levels. Numbers are great. Okay, Microsoft is probably the most important AI company out there. They've invested $10 billion in OpenAI. OpenAI just signed a deal with Apple, and OpenAI, they have a number of associations, and we think that's going to be the primary beneficiary in the software and hardware area, because we think AI is going to spur a new upgrade cycle. Apple believes that it's going to spur a new upgrade cycle for their phones, because OpenAI that they're going to implement only comes with on the Apple. You have to have the Apple 18, I believe. I believe that's the phone. That's going to be required. So it's going to need more horsepower, and so that's probably a lot of people are going to now upgrade with that additional capability of AI on their mobile device. So Microsoft, it's not at a 52-week high yet, but it will be tomorrow. And this is, these stocks, we'll look at Apple, Microsoft, Google, and these stocks, the upside is probably, they're not going to double because the companies are so big. But we see this stock going to 500 by the end of the year. So, there's 20% upside. We think it's going to be, it will outperform the indexes. So, Microsoft definitely is setting the stage for the next move up. And it has been going sideways for months now. Look, this is 1, 2, 3, 4. That's 5 months. 5 months it's been going sideways. You had that shakeout. It's come back. Now you have this great VCP pattern. So you can see volume. Look at volume decline on the pullback. That's what you'd like to see. Look at the volume right here. It's under the average. So look for this to break out on expanding volume, which would be a signal that, okay, the move's on. Netflix has been killing it with Netflix Live. And of course, their original programming, their live programming. They had, the Tom Brady roast, which was well received. This is just one of those discretionary items that Americans just aren't going to give up. So you have this perfect cup and handle. It's right there at the pivot, at the breakout. The pivot really was 639. So you're about, 1% above that pivot or so. So again, this is setting up perfectly. And again, we're thinking that the next level, the next move, you can see the breakout here, and the green line that you don't see right here, that suggests that's the 20% profit taking area, where if we're in, and we are in these stocks, we'll probably, if we get a 20% profit in these from here, we're going to probably take it, in the next 90 days. So Netflix, we think, that, looks great. And we talked about Nvidia. And again, let me just address what I believe Dan asked about. I think he talked about the stock splits. Yes, when you have excessive splits, but you really got to go back to 2000 when we had multiple splits. Rarely, I can't recall where we've had a number of splits in growth stocks recently. Like I'm talking about the last the last 2 to 3 years. And it seems to be, popularized right now just to make the stock more attractive for retail clients. That's why these companies are splitting the stock. But excessive splits back in 1998 to 2000, you saw these stocks splitting multiple times. So it's going to be interesting to see. Yes, this is a 10-for-1 split. We go back and look at Google and Amazon and so forth, and see where the positioning was at that particular time. What I'm suggesting is that Nvidia is not like Qualcomm right here at the top. And let me change that date to, say, February of 2000. Let me go to June of 2000. So see if that shows up on the weekly. And yeah, there's that move on the weekly. See, from 1998, and back here from this 1990, I played this the whole way and made really a fortune from that, that breaking out and that next leg up. And when you take a look at the weekly, see, 2-for-1. But I believe there's a 2-for-1 split right here in 1999. But I believe there was a 10-for-1 this day. I'm going to change it to January 8th. January 8th, that is 2000. See if it shows up. January 8th of 2000. And go to the daily. Yeah, see, there's the 10-for-1, guys. And
Roy,
yeah,
Tesla had a split in 2022, and when it split, it was already kind of in a downtrend, longer term.
yeah.
But like it went further down, like the downtrend continued.
Yeah, and that's the, that is the dilemma, Chris, because we're asking ourselves, is this like the Tesla, split? Is this? But go back and look again at Google and Amazon were both under pressure and they weren't near their 52-week highs. This is a situation where you have a hot stock that they did the 10-for-1 and that was the peak. But again, that's, we're not able to see that what the earnings quadrants were going back. We can't back test and see what they were then, but earnings were peaking at Qualcomm then. And what we're saying is the earnings, the earnings aren't peaking for Nvidia here. So and these guys go on longer and higher than you project, but this happened to peak, see, on the 10-for-1 that day. And see, so that's down, that's down 200 to $1.50. And I remember this because I had this licked up and I didn't sell it on the split. I sold it right here, but it dropped 25% in price. So you did get a double, but 1, 2, 3. But I remember I got clobbered in these 5 days right here. I had a massive position in it, among other stocks at the same time, and so that 25%, that's in 5 days. That was pretty brutal. So we were certainly watching to see if Nvidia was going to
And see, that's what
something like that was
that's
going
what
to
I
happen.
think. See, a video just the chart by Qualcomm, what you just showed me. I didn't even know that, but Nvidia, it ran up so much to the stock split, and they fundamentally are sound, and they could exceed expectation in that case. But that's what got me at a catch-22, because I just think with a stock split, institutions might feel like it's time to take a rest from it. Like they might decide to sell shares.
Yeah, I understand. And
Yeah.
one, just a mechanism that we're using. You see this base right here at 97. It would not surprise us for this stock to go to 200. And by the end of the year, it wouldn't surprise us at all. Or on the other hand, with the bad number tomorrow, there's going to be, maybe there's some selling and it goes, it comes into the 21-day. But what you can adamantly say, yeah.
Let me say this real quick. I'm not meaning to cut you off, but I'm gonna say this real quick. Then, like seasonally, October to September, August starting to roll around too. So I mean, I don't always look into seasonally, but September, I take September like I take that much serious, because I'm a trader. I'm a swing trader, and that be volatile. Yeah, so I take that much very seriously.
Yeah,
So,
in September, I mean, what if we get this move? Ideally, Chris, what would be great? And we're positioning for this. We think, if this market has some juice to it, we can, and these stocks that we're looking at, they can move 20% from here, like in the next 3 months. So, I mean, we think before the year's out, it's going to be a 50% year or higher. And so we think there's another, in these stocks, in our portfolios, in ours anyway, we think there's 20% upside in all these companies. Now, half, maybe half of them work, half of them, go, you get stopped out, and, and half are at break even. So, and then as an investor, it's important to, to move out of what's not working to what's in working. So there might be quite a bit of rotation, but, this move here from 100, what would be classic in my experience is for this thing to go from 100 to 200, just because of the momentum. And then when we see this on all the, magazine covers, and, Jensen Huang, being, the time man of the year, that's going to probably be when the party ends. So, be aware of that. That certainly that's anecdotal there, but we think, and again, back when we bought Nvidia, we bought it at 500. We took that our first big position at 500, and pretty much got a double out of half of it, sold the rest, and now we're back in it. From a month or 2 ago. But we think there's much upside. But the uptrend is intact until you break the 21-day. And so we're clearly watching that 21-day to see to make sure it doesn't trade 2 days below the 21-day. But the stock's still healthy in this uptrend, and that shows you the testament of the strength right now of the company.
okay.
So Roy, quick question on that. If it goes up to 200, that would put it at a $5 trillion market cap. And that just seems like bizarre for me.
Man, have you ever seen a company like this where earnings are growing 400%? Look at these these quarterly results. I've never seen a company grow like this in 37 years.
Yeah, and I was gonna add because I sort of agreed though too, just because it's obviously harder for something to go up 100%, or what that would be 67%. But when I look back at Apple too, just as an example, like when it was trading at $70, that's when it became a $1 trillion company. And that was also unfathomable, right? And then 2 years later, it's a $2.5 trillion company. So and a number of stocks did that, right? Like Microsoft, Apple, and Google and Amazon. I think we're all probably crossing that $1 trillion threshold. And I know back 5 years ago that seemed crazy, and now here they are up 3x. Over, I guess, another 5 years. But so I mean, I get where you're coming from. It does sound crazy, but that's just the way
Is
these
there
things will go over time.
is there a difference between earning and the sales growth?
Between the earnings and sales growth, specifically, would you ask
Nvidia,
that?
Nvidia.
Is there a difference between the top number is the earnings growth here on the chart, and the middle number is the revenue growth, the sales growth?
But that's what I'm saying. But the rate is much different between the sales growth versus earning growth, and the earning growth is a reflection of their profit margin, what they can charge to their customer. So the question is it sustainable?
It's
That's
no.
always
It's
the question. Sorry.
yeah. I guess that's the $1 trillion question. That's a great question.
Mhm.
And but what the reason the stock is such in favor is the market was so surprised by the growth. I mean, look at these numbers. Look at these numbers sequentially from 13 billion, 18 billion, 22 billion, 26 billion. These are, I've never seen numbers quite this large, never seen this type of earnings growth. So it's not, many companies, not many, but some companies, they try to goose their, the earnings of the company. And sometimes there's no revenue growth or very little. Like you might have 7% revenue growth and the company's growing the earnings growth is 20%. And that happens quite often. But here, this is a case where the numbers are just, they're just unfathomable. And we just don't, we know that they're in the prime pole position, and we know that the new chips are coming. What's the Blackwell, Wes? Is it Blackwell, the new chip?
That's the
Yes.
latest. Yeah.
And then, remember Nvidia came out a week ago, and they gave a playbook of after Blackwell. And Blackwell, I don't know how much faster that is versus the existing chips, but that's why you're seeing AMD. With people were buying AMD for that, because of the AI, the AI implementation. Well, they don't have any AI implementation. They're way behind. They'll never catch up. And if you're think about all these, think about all the enterprise companies across our vast land. If you got to make that capital expenditure, and in this space, who are you going to have? Are you going to buy a second tier company that's not, that's not faster and it's inferior? Are you going to just buy the best and pay a premium price for the best? These enterprise companies are paying a premium price for the best. We saw that, Elon Musk just diverted 100,000 chips from Tesla to his AI company. And, if you want the best product, you're going to have to use the best prototypes. And that's what Nvidia provides. So, back in the day, back when I was getting out of grad school and looking for a job, IBM at that time, they had the reputation of never, a great place to train, if you're an engineer, and they were proud of the fact they never laid anybody off. You had a job for life, and of course that changed, and no one could go wrong. And remember, we had the IBM and we had the IBM PCs. So that was big growth area then. That of course was overcome back then in the mid 90s by people like Dell and companies like that. But for a while, IBM was the undisputed leader. And at some point, there'll be a better and better, faster. But I can't see when that might happen. That's great leadership by the company. I just don't see where that ends. But it will end. It will end. But if it ends, you had that parabolic move right here, and with the big reversal, you've recovered that. So we're in this nice uptrend again. So on a fundamental basis, there's nothing stronger than Nvidia. NVO has Ozempic and Wegovy and Mounjaro and Zepbound. That's Lilly's product. But this NVO, we think great. We have high hopes for this. But, most people, they're not aware of, quote, the name Mounjaro, but that's Lilly's product that is selling, much better than Ozempic. But everyone knows of Ozempic. That name. It's like Google or Xerox or something like that. But we do have a position here, and it's setting up great. And it's, again, this is one of these. Hopefully we can, one of these companies that you can hold 4 to 8 quarters, and get a nice gain from the company from here, like, up 50%. It just broke out this 138 pivot. It's only up $3 from the breakout point of 4 months ago. So it's setting up quite nicely.
Hey,
So
Roy,
yeah.
do you mind looking at Apollo, APO? It came out of a pretty tight base yesterday.
Yeah, let me just finish these right here. I'll briefly hit on these, and then we'll switch to the individual companies that you guys want to cover. Okay, ON is a shoe company. That area's been strong. We actually bought the stock, I think, here, and you've had this earnings drift. Its stock looks great. Nice quarter on the earnings, and there's the breakout. See, that's the trigger. That's why it's important to look at these stocks to see how they act, during the earnings period. But got nice numbers. Earnings are going to be up 100% this year. We just bought Pinterest a few days ago, right here, breaking the downtrend line, right there, and there's the earnings. There's earnings. Earnings were up 150%. And the stock broke out on big volume. Great, a great sideways action, not giving up very much, respecting the 21-day, turning up. Okay, stock looks great. Pure Storage in the memory area, WDC, really Micron is in the memory semiconductor area. PSTG and WDC are the big beneficiaries in this storage area. And you can read about Pure Storage. They've got a novel approach where they're storing their systems, storing their information on smaller devices and smaller systems and so forth. That's what makes the stock attractive. We bought it breaking this downtrend line, like right in here, and we didn't sell it in the earnings, and stock gapped up, went up nicely, and then now it's pulled back. Now it's on that nice uptrend again. and then 2 more stocks, I think, PWR. If you're, if this is a play on the build out in the construction business. And this company is in everything from utility, helping equip, assist, refit, energy companies, utility companies, data centers. They're right in the middle of all that. It's it doesn't have that explosive growth, but it's something that that can last. It can last for many different many months from here. And this stock is setting up here at the 50-day. It looks beautiful, and it's viable right on the pullback to the 50-day. This is not not nearly the heat that some of these other companies have, but you've got a nice a company that's in that's in a great area that covers data center growth and construction growth and so forth. TMDX has got a great product. They're in that the organ delivery business. It's really they really have a network. They've actually bought their own planes, and they've got satellites all over the country so that you can get the organs to the recipient quicker. And the device that they have where you heat the organ and the blood is heated is quite novel, and it's been demonstrated to have more efficacy, and that's what's got the stock going. And it reminds me of an earlier sort of ISRG novel business that they are going to dominate because they're the only ones in it. So they are the leader in this business. Small company, only $4.5 billion. It's acting, it's acting terrific. And again, see, remember we were talking about these all-time highs. Notice it made an all-time high here. And, this is where we got interested in the last month, where it made another all-time high. These stocks that make all-time highs, they're those are the, you should definitely pay attention to those. And let me pull something over from bar chart. See if you guys see this. I may have to share it with you. Do you see bar chart on your screen, guys, right here?
Yep.
Okay, good. Okay, so it's active when it slides over. This is these are the stocks. This is from bar chart. And if you go to stocks, and then you go to new highs and new lows, and as far as I know, this is the only place that I can get this. And these are the 52-week highs that we can get this on MarketSmith, but all-time highs. And I look at this, we look at this because again, these stocks will make all-time highs with no overhead. This is where they can, this is where unquestionably the leadership is. So Apple just made it today. And there's Applied Material, there's Broadcom, Avango. They report tomorrow though. There's Costco, CrowdStrike, Guidewire, Iron Mountain, Kalac, Lilly. So, there's Regeneron that we're very interested in. There's Micron. There's that TMDX. So they're Skechers. The shoe companies have been doing great, like Birkenstock and Deckers and ON and so forth. So that's useful to look at. So do some research there, guys, and pay attention there, because when they get into all-time high territory, anything can happen. And that's it. So let's move to APO, and then we'll look at all the stocks you guys want to, take a look at. This is and this is on a watch list. This is on a watch list for us. We haven't bought it. You know, we have KKR that was just put into the S&P 5. It hasn't been put yet. I think that's in a couple of weeks. But KKR was announced a couple of days ago.
Yeah, it came
Moving
out the
to-
same day on volume, and I think the base goes back to February. But
Yeah. Go ahead and comment.
yeah, it came out yesterday on pretty good volume.
Yeah, it
on
did.
the PKR announcement.
Yep. And it's got a great VCP. I mean, look at the sideways action, and it's drying up. It's got really almost a perfect VCP, and it did try to come. Earnings were reported already. What causes some indecision for market participants in a company like this is that they can engineer whatever they want. I mean, this is in terms of the numbers, and you just don't know where the numbers are, what the numbers are. But they can engineer because these companies are very heavy in private equity, and they sell shares when they want to, based on liquidity needs for the company and investment needs and things like that. You don't know if it's going to be. I mean, they could report triple-digit numbers if they wanted to, but they are reporting these numbers in a sort of in a slow fashion, and they're doing it deliberately. So 89 relative strength going sideways. This is a great base. So it's definitely actionable up here. $1 away. So it's actionable $1 away, and this is something that hasn't it hasn't run up, and this would be something that would be a candidate that I certainly would consider. Taking out 120. On the move, taking out yesterday's high. Yesterday's high on volume, that pocket pivot right there. That, and then an inside day today. If you recapture yesterday's high, to me, I think it's a buy.
Thank you. Sorry I interrupted you earlier.
That's okay. Thanks for the comment.
Could you look at the Signet SIG? It's a good stock, but it seems like it's in a bad neighborhood. The industry is not very good.
Okay, the relative strength is 92, which is 5. It's just choppy. So let's look at the numbers. Numbers aren't, the numbers, not really. The numbers aren't any good. So 2024, they're going to have negative earnings. Look at these 3 negative quarters here. Where earnings, they do have positive numbers. They're just declining. And in this area, it's really discretionary income. Maybe it can't get going because maybe it's smelling a potential recession, and that this is trying to go, but maybe the economy is going to hold it back. Earnings are in 2 days anyway, so earnings. I would never hold this stock with these types of numbers into the quarter. In 2 days, to be very careful. But it's sloppy. But the next earnings report will dictate probably if the next move in the stock. So I wouldn't be surprised if this stock takes out its high. If this, which is 110. On a good earnings report, and there perhaps it might be in gear and be actionable right there.
Thank you.
You're welcome.
Roy, how do you see this TMDX recent action? I mean, it is going after like gap up, like it is going sideways now. So is it very healthy, constructive? What do you think?
What
TMDX?
Which stock, Amit?
TMDX. Transmedics, yeah.
I mean, this stock looks perfect.
Okay.
Now you had there's the earnings, and this stock didn't come in any. I mean, I think we're in the stock at 129.
Mm-hmm.
So we bought this stock right here.
Mm-hmm.
We bought it right there. So the stock, you had to break out on earnings. You want to see follow through like day 2. See, just like that.
Mm-hmm.
That's what you want when these stocks break out. And I'll show you, it's you don't know until it happens, until you're managing risk real time of what you would do. But the idea that the stock followed through on day 2 was very positive. And, we bought it right after this 2-day pullback and then the turn up right there at 129. It's acting perfectly. Earnings are out of the way. Now, it came in today. I don't know, maybe they do a secondary, maybe something is out there, but I would expect it to hold the 21-day, which is
Around 130.
Yeah, 133.76, which is down 4% from here. If it comes in and takes this low out, then that would be disappointing and really an expectation breaker. But it's setting up, this is the first pullback. See if it'll pull back. Again, this might be something that would be off tomorrow if the market sells off, and you could buy it at the 21-day. So I would buy this stock at the 21-day, which is, again, that was 133. Just say, again, that Friday that we reversed, in the market a couple of weeks ago, the NASDAQ was down 300 points and closed down 2 points on the day. You had that shakeout and reversal. And, we are prepared to, have something like that. But, this stock looks great. It could go sideways a little bit more, but it's definitely in an uptrend. And, we think it's viable on weakness. And again, now for us, what we might do is take the position up if when you take out this high of today's high. So if this stock would shake out everyone, it takes out today's high, we'll probably press the position.
Okay.
So, I think it looks great.
Mm-hmm. Thank you. Thanks a lot.
Hey, Roy, if you could pull up BZ, it's a Chinese LinkedIn, basically. If you look across the bottom, those numbers look pretty good. But if you look at the estimate for this year, it's kind of, what do you make of that red number up there?
Not too much. In the Chinese area, there are only 2 instruments. And Wes and I were talking about this. We almost added this, but we don't like China. And China is their enemy. We don't like TikTok because of because we think that they're stealing our information, and they will. We think it's naive to think that something that's owned by the Chinese party that's associated with it, that they're not going to see, all this information. They're not. We think it's folly to believe that they're not going to have access to it, no matter what you might think. But we do have 2 Chinese stocks that are interesting to us, PDD. So this would be one of those second tier, Tom. So if you want the leader's this one. That's your leader right there. And remember, they own Temu, and Temu, I think, is the most downloaded app on Apple right now, this year, this month, whatever. They're signing up millions and millions and millions of people. Hundreds of millions of people. I mean, people are, they might have 200 or 300 million people that are signed up, and they provide cheap goods at very, very cheap prices. And so Temu is the fuel behind PDD going. And you can see this is the leader. See, it's got a 99 earnings per share rank. It's got a 94 relative strength. There's a 52-week high, you know, a few days ago. And you might say this stock just, we almost bought this yesterday. And Wes and I we'll be talking tomorrow on this pre-market to see, well, is this one that you want to add? But it broke in this downtrend line. Look at these, look at the earnings growth. So, last quarter earnings were up 185% and revenues were up 119. This is huge growth for a big company, $200 billion. And this is you do have, I think, TME, I think Tencent Music, that is also got a strong relative strength. But I look at the relative strength, but these are institutional numbers. Look at the growth here. $1.48 to $3.98 to $6.55 to 10 to 13. This is what true market leaders, these are the numbers that they have, but it's a Chinese company. And China can come out and, China can invade Taiwan. If that happens, the Chinese stocks can get hammered. Perhaps like the Russian stock market did. The Russian stock market went almost to nothing after they invaded Ukraine. But, it's got institutional numbers, looks, fantastic. And again, this is viable off the 21-day right here. So PDD would be the one I would look at. Look at the metrics here versus BZ. So look at these numbers versus BZ. And then, of course, the other would be KWeb, which includes right here. See, it's at the 50, by the way, and there's your follow-through day on China. And China, now this has gotten slaughtered, but there's your follow-through day right there. I had that mark, which signified the potential bottom in the group. So it's ran up to 32 and it's pulled back to the 50-day. And so this is a low risk play. We don't own it, but we would definitely consider it. And, it's at an attractive, if you like pullbacks, it's pulled back on low volume and, there's the turn. So the risk, of course, is the Chinese market. But, but this is an ETF that includes JD, Alibaba, Baidu, etc., PDD, etc. So this is a way, if you don't want to put, quote, all your marbles in one Chinese stock, you can, you get the exposure. If you want exposure to that market, this is a good way of doing it.
Could you look at
Hey,
the
Roy.
MEDP?
Yes. What's the stock?
MEDP, MEDP.
Oh yeah. Yeah, this is on our same kind of stock. It's on our focus list. And if I'm not mistaken, and this seems like a great growth area, they provide the back office for qualifying, storing, accurately assessing how all these trials go for drug discovery. I think that's really what that's the niche that they're known for. So when you launch a new drug, or when you're doing trials, you need to have meticulous discovery. And hold on one second. You've got to have meticulous record keeping, and they provide everything in a format that is repeatable, scalable, and so forth. So it's possible that these biotech companies have spent billions and billions of dollars. It's quite it's quite possible that with with AI drug discovery, that this is going to launch a new wave of innovation, and it's going to launch, a great period where biotech can, in fact, lead us the way AI is leading us right now. Because, when we think AI, you have companies like RxRx that has an agreement. They've got an association with Nvidia. They're in the drug discovery area. But this is what MedPace does. You had that shakeout right there, and then it came immediately back. This is very good action when you can see it broke, the 50-day, and you had this break that took took 2 weeks, but you got it back in 2 days. So that is extremely bullish action. Extremely bullish action. Solid institutional company. It looks great. You had this nice base, and this stock is certainly, if you're sitting here and you're underinvested, you don't have money in the market, I'd like to have these types of setups like real tight, where here, if it's on your focus list, this would be viable taking out this high 3 or 4 days ago. So how do you handle that in a setup like that? Well, you buy taking out that high, and then you press it at 421. So you may take a 2.5% position, like taking that high out. You wait until the trade is going your way before you buy it. That means it's got to take out today's high, and then it's got to take out that high that I've noted right there, before you would have like half your position in, and then you'd want your whole position in at 421. Numbers are outstanding. Institutional company, $12 billion sweet spot. This is right there in that mid cap area, and I think the stock looks great. Thanks for mentioning it. But this stock is definitely actionable. Over these levels, there looks great.
Hey Roy, what's your take on First Solar? And not only the chart, but also considering that the entire solar sector is rather weak. If you also want to look at Enphase or Solar Edge, so kind of First Solar reminds me a little bit of the lonely wolf. You know what I mean?
I do know. In fact, that's why we avoid it. And First Solar is giving me a migraine, and it's giving me a migraine because we missed it. And and that was the reason that we didn't buy it, is because government's getting involved with tariffs. We know that we look how this stock traded from here to there. It's not investable at all. And the buy point was that today, was when they reported, and you had to buy the stock at the open. You had to buy the stock right there at the open to get in, and we didn't, and then we were afraid of it. Stock was up $39, up 18%. It had that 10-300 that I'm talking about, and really, you want to see like these stocks that blow off or that had this momentum like that. You don't want them. You want them to. You don't want them. You want them to follow through day 2. Here, you had 1 day. You had 1 day where it, only 1 day where it sort of came in. It didn't even give you a time to pull back here to the 10-day. It just went straight up. Now, then it pulled back to the 10-day yesterday, but this base is so short. I mean, the base is so short, and it's also hitting. See, look, that profit taking area. See, from from pattern recognition. Mentioned it here on the breakout. See the 232 area. So there's your pivot going back back here a year ago. You had 1 day to get it, and then if you didn't get it, we would have bought this stock if it would have come in, 2 to 3 days to the 10-day, and then use this low on the second day. So what is that? So it's getting away from you. They are sold out, and they're going to be beneficiaries, of this whole power game, and it is. I mean, it's actionable. It's here. The real move starts here.
Exactly, the all-time high from 2008. That's what I really love to see.
Yep. So this is one of those that do you own the stock, or are you just looking at it?
I bought it today, the breakout. Yeah.
Okay. Okay. Great. So that's I mean, fantastic. So what's nice about your buy is it was so tight and so short, and it's really picture perfect, taking out yesterday's high. That was your entry point. That was your interest point, or when it gapped down and turned green, but now you have a profit in it. So your stop is clearly today's low. So you could have, it'd be nice to have size when you do something like this, and then you can you have a really tight place to put your stop. So if it I mean, you could say the stock set up on this like 2-week base. What did that look like on the weekly? Yeah, look at that. That was really a 3-week.
You know what I also like?
What do you like?
It's about to take out the century mark of 300, and then right after you have the all-time high. So ideally, we see follow through tomorrow at the end of the week, and it takes out maybe even both the resistance levels. So that's what I'm looking at.
Actually, IBD put an alert on the first solar on May 17th.
Yeah. Yep. That's great execution. Congratulations. So this is one clearly that you saw it. It moved up here. You saw the base and then the breakout. That's really terrific execution. I think. And I think you're right with that you're right with the round number of 300, Livermore number. And I think you're right with the all-time highs as well. So the numbers are great for this year, next year. $30 billion market cap in that mid cap area. And again, this is one of my biggest winners in 2007. Like during this period, back here, this is one of my biggest winners in 2007. This stock was also back here. It was one of my biggest losers because I bought the pullback like in here, and it went, the stock dropped from 250 to 120. And I recall, I know, I didn't have my stop in appropriately, and this moved down. It really got hit, but this was one of my biggest winners in 2007. And now when you recapture that after 17 years, wow. This is a huge base. So this definitely should be on everyone's watch list as well. We don't own it, but congratulations, you do.
It reminds me of Microsoft between 2000 and 2016 when it finally took out the all-time high.
Yeah. See, and look at, notice this long base here. See on Microsoft when you're talking about it, that look how long this thing underperformed. And then when they finally got their stuff together and they re-engineered, refueled what they're doing. And I don't know when the upgrades came and all that, they finally got it figured out in the cloud and, with Azure and so forth. But look at this, look at the Microsoft at an all-time high too. See right here. So this is why this Microsoft, who's to say, Microsoft, we think is going to be, with Copilot, is going to be one of the biggest beneficiaries with Windows operating system, Copilot, the upgrade cycle. They're going to be, a big winner. Who's to say you don't get a move like this over the next couple of years in Microsoft? This was a 1, 2, 3, 4. That was almost a 5-year move, and this, this just broke out. In the last 6 months. Who's to say we don't get into a move here where you go up for 2 to 3 years as this AI cycle or more than that, or the AI cycle just permeates everything that we do. So I think you made a great point. And that's why, I made the point here on these stocks that make all-time highs, that they're important to look at.
You should look at the Micron chart. It took 24 years to break out.
Oh, yeah. By the way, I want to show you guys something too before I forget. We love MU. I mean, MU looks great. There's your all-time high, in the stock. By far, in this, in the memory area, they're dominant. They're the leader. But there's that April sell-off where it got nasty. And see, all these stocks came in like 20. Many stocks came in 20%. And that found its low and came all the way back. And we'll take a look at like ARM to show you kind of what that looks like. But this MU looks great, and so it's it's a 52-week high and an all-time high right here, and so it's in new high territory. Buy this rather than buy an AMD. See, this is. And that's when AMD peaked, because people, they were hyped on the AI, on the AI business, but they didn't, people didn't realize that they're the weak one in the whole group. So consequently, smart money liquidates, comes down here, was just downgraded by a couple of firms yesterday. Its relative strength is 75 going lower. So this is what you want to avoid. But let me show you guys something powerful that that might just might work. So ARM, and we had a double out of this. So this was one of big winners for us, and we didn't sell it into this number. We sold it. I know we sold it. I think here, but we bought this at 65. Initially, right there, we should have de-risked and we didn't, but we thought this stock we thought it was a $200 stock. Unfortunately, went through this sideways action. We got stopped out, and notice this just got clobbered from the, going through the 50, and there's the low. And imagine this coming all the way back. It was really startling, amazing, really, that something like that, that this came roughly all the way back. And with that in mind, guys, this is an unusual type of setup, but this is one that can go. So SMCI, with their numbers, earnings growth 300% last quarter, and this is a company that had tremendous quarterly growth. See, it went from 2 billion to 3.6 billion. We've rarely seen a stock that's grown like this sequentially. That's almost doubled. The business doubled in a quarter, and that's a testament to how strong their business is. And if you go back and you go through the annual reports, not the annual reports, but the CEO's comments, he indicated that this business and their business is going to probably grow in a dramatic fashion for 5 years, not 5 months, but 5 years. And, when you have a stock that has this type of powerful move, so you had this powerful move, and we really didn't, play this very well. We didn't participate in this for a number of reasons, but you had this big move and this shakeout here with the numbers as powerful as they are. Earnings are going to be up $23 this year, $30 next year. I think there's a trade here, and I wouldn't be surprised if this stock, if we have good, if there's a good response tomorrow, I would expect a move back over the 50-day. See the way that it tried to recapture the 50-day right there? See where it was up $18 that day. So people, not just like me, but you've got a lot of people out there that are sniffing around and trying to get on the right side. But if this stock breaks the 50-day, normally we don't buy a stock below the 50-day. But, if you recapture, this is a stock that could have a big day tomorrow. Say, if the market's, if the Nasdaq's up a couple hundred or something, this is a stock that potentially could be up $20 tomorrow, breaking the 50. And then the trade takes you to like 1,000 to like right here, the quote, the trade. And because it's not at an all-time high, I would consider it just a trade. But, I have an alert right here at yesterday's high. So if it takes out yesterday's high, that potentially could be actionable. And, with a move like this, and what you would want to see is something like ARM. See where it broke the 50-day, guys? See right here, that day? And, it's not, I actually, it's not the same chart or anything like that, but that was your buy point where it's came up to the 50-day, went sideways, and it broke above it, where you had this moving average undercut and above the 50 buy signal. And so it's come almost all the way back. So I wouldn't be surprised if this SMCI, if you get the bottom fishers.
Roy, are you not worried about all the overhead? I mean,
involved, yeah.
3 months of overhead supply.
Yeah, that's why it would only be a trade. So this would, but the trade can be quite powerful. The trade can go, like that. But yeah, you sell right into that, Mario. You sell right into it. But I'm just pointing out that, okay, this might be an actual setup from an unorthodox type position. But the reason that Wes and I are interested in it is because the earnings, the earnings power. And so, if, earnings are going to be up another 100% this coming quarter, we think they have at least one more. And by the way, look at this. This is almost like a double, it's not quite a double bottom, but you undercut. You didn't undercut this time, but you do have this pivot here at 972 right there. So there's that's kind of a shaky double bottom because this part didn't undercut, but it has come in sufficiently to get a lot of people out. But that's the setup right there.
So how could they compete with the Dell or HP? Because they also have a huge business, server business.
This is, you might this is a disappointing report. And I think that there was some news about in the Dell in their server area that I think Wes told me that there was some question about profitability in that area in terms of like they're doing a lot of volume, but they're not making a lot of money. And so I think that's why you have these high expectations. That's why the stock sold off. So this is this is a dangerous position, but again, this is the type of thing that could give you a trade to that area right there. If you take out this high right there, you could have you got a $20 trade potentially, and you sell right into that. If you're in it, you sell right into it because of the abnormal action. You want to avoid that type of abnormal action. Sometimes they come back. More than likely, they need not just days but weeks to set up again.
Do you have any views on the ELF?
ELF? Yeah, it looks great. So this is an interesting company, and we would have, if we would have bought this stock today. Look at the reversal yesterday, and we didn't. We wanted to keep some some buying power, and going into a market moving news tomorrow. But there's the earnings report. So you had this shakeout. Like look at this cup. What's nice, you're in this uptrend. Now you're putting in the cup. So there's your early entry really on it when they reported earnings. And then it came in to, to where the earnings report was and held the 21-day. Notice where it held the 21-day. Actually, guys, see the second day. You want these stocks that come in. You don't want them to violate the low of the second day of the 21-day in setups like this. So this is this is a stock that has been a big winner. And we had some FOMO for missing this because look at this. Look at this, the all-time high. See, look. After the IPO, it got crushed down 90%. And this is similar to that setup on First Solar that we were looking at. It came all the way back. Look at the shakeout right there. That was a brutal little shakeout, and then the move to all-time highs. So this ELF, and it never came in. And that's, this stock went up 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 14 straight months. And I regret missing this, but it just never came in. And then you had that pullback and then the move here. We thought it was done, but it's not necessarily done. The revenue growth is great, and the product apparently it continues to sell well from for value conscious females. So it looks good. The turn here. So the earnings are out of the way. It responded great to the number. So I guess we have an alert right up here. So you would want to, there's, I guess, where your alert should be. You have that horizontal line, like 192, 192 or something like this. So this looks interesting. You have a relative strength line at 92. It's, definitely should be on a buyer watch list. It's just a matter of initiating the position. It's, it's hard. It was up 7 today. See, it's, if you didn't get it, you'll be chasing it. Presumably, it would be one if the market came in. I'd buy it. If the market came in, I'd buy it. Using today's low, which is $10. Say $10 from today's high, big spread there.
Hey, Roy. So earlier in the session, you listed a bunch of stocks there that are on your buy list if we happen to have a favorable day tomorrow.
Yes.
Do you mind for that list again? I know Elf wasn't there, Kava, and some of the other recent leaders.
Yeah.
Do you mind those real quick?
Okay, this is what we're focusing on, and so we're gonna point you in the right direction. Now, execution, again, these aren't recommendations; it's all up to you. But this is what we have a propensity to focus on tomorrow. Okay, we think the Apple report and AAPL was enormous. And if you change the date, see, that's why, this is why we didn't buy the stock yesterday. Apple has a 3-day conference. I think it's 3 days where they were talking about all their AI initiatives, and it was actually down yesterday. So despite all those initiatives, the stock was down. So it looked like it was rolling over. And, it looked like the stock was rolling over. And, and then, you had more, this is an important announcement and the stock wasn't up. And, so now the expectation breaker on the upside was, okay, if there's the move down and people sold it, like very short-term people, okay, they exited it. And then you had institutions that came in the next day, taking out this high. So that's, that was an expectation breaker on the downside and the upside today. So if Apple comes in, you might have one day, where say if it, so support on this is at 200. So you might have just one day tomorrow. But, remember I told you the strong ones that break out like this, you want them to follow through on the second day. So if this opens down and then takes out today's high, it's a buy. If it comes in, say the market opens weak and stays weak and we have a really choppy, nasty day tomorrow, support on the stock is 200. So 200, I'd be prepared to buy it at 200. I'd be prepared to buy it coming in and then following through. Remember that First Solar look that we had, that we had one day to buy it. And First Solar is no Apple. So that's what I would consider. So if you get this kind of day, see right there where it came in, and it came in one day. So if you get that, I'd be buying Apple on weakness tomorrow. The other stocks, and in no specific order, Meta.
Hey, Roy, don't you run the risk on if it undercuts 200? I think Morales calls it the DTSS, a double top short sell, something like that.
On who?
On Apple. If it undercuts the 200, the 200 century mark, that could also be considered as a short entry then, couldn't it?
Coming back through it, Mario, would be something that you'll see. I bet Gil will probably tweet about this. If it breaks 200, that's not good. But the idea, I don't consider this a double top because it took it out. It's like looking at a head and shoulders top. A head and shoulders top is valid until you take out that right shoulder, and then it becomes non-existent. So this isn't, I don't view this as a double top. I don't view it as a double top. Now here, this is your double top. See, look at the difference. See, there's your double top. See right there? there's your double top. This is taking out that resistance, so it would no longer be considered a double top. And you know, Morales, when you have these double tops, you don't have a. It's not really a sell until it breaks a 21-day, Mario. So you know, he'll say a double top sell signal will be. It would have to be breaking this 21-day, which is much lower. But that's you know, if you look at Morales's book Trade, you know, like an O'Neill disciple, that's how he describes it. So
Okay, thank you.
You're welcome. Now there's going to be a play here, and guys, take your pick. And you know, in these in the semiconductor area, it's the 12th ranked group. Look at this base. So this is setting up beautifully. And you know, there's you know, there's going to be an upgrade cycle, and you know, the chip cycle has been in a downtrend, and it's in you know, it is expected. It's expected to you know, continue to grow stronger the second half of the year, and that's why you know, a lot of these stocks like TSM, they in bad numbers they actually went up. And because the market was looking ahead, but there's a setup here, and take your pick. They're pretty much all the same type of companies, but it's Lam Research, KLAC, see a 52-week high, AMAT, and the other player, and see they're all in. See, you're all getting confirmation. They're at new highs, and ASML. We like this ASML a lot because it's not, you know, it's not extended the way that how we would characterize that. You've got an inside day here, and so this is something that we, you know, that we might find actionable, taking out that high of yesterday on its way to, you know, 52-week highs. So you know, ASML, they are really leaders in the lithography area, and that's the ultraviolet machines that are utilized to make semiconductor wafers smaller and smaller. Their machines sell for, I think, about $400 million, and they just sold one to Taiwan Semiconductor. So this has got a, you know, so you're, you know, one of those four stocks that's setting up. Kava, and you know, in the restaurant group, and this is one of you know, this is one of the examples of very poor execution for us. We sold it below the 50-day, right there. We had a nice profit in it. No, we had a profit in it. We bought it right there, didn't take it out, didn't sell it there. But breaking below the 50, this is when this market was shaking out, and we went to cash, and we, you know, we sold it, and we didn't buy it back, breaking the downtrend line, and we should have right there. And that downtrend line was really the reversal. Your buy point was right. Yeah, look, it was really, you know, there's your last place to buy it right there, but it broke the downtrend line right there. And, you know, the move up here, that was earnings. It got quite volatile during earnings. And, you know, this is, it's, you know, it's a leading stock that, of course, it's, you know, got long-term potential, much like a Chipotle. So it's in all-time high territory. Notice that. See, again, when you go back and you look, it's easy to look at these things in retrospect, to study your execution and you know, the flaws in your execution. But you know, when you go back and you look, it was, man, it was just an all-time high territory. It was a buy on the pullback, not a sell. And it's one of these that's everybody's talking about. Everyone knows it. So it's sort of a crowded trade, and it's like your first solar trade. Excuse me, guys. Because this is no base. This is no base up here. It's a momentum play, but it's can probably be $100 stock, like imminently. You know, if we get the move, you know, if we get it to surge up, you're gonna hit that round number of 100 and go through that. It's could probably be 120. You know, it can go to 120 on the run more than likely.
Roy, could you analyze Exxon price action, please?
Exxon?
Yes, please.
Yeah, very poor action, very poor action. A cyclical stock that is just, how do you trade this? And we don't buy stocks for dividends, but it doesn't fit any of our criteria. Look at the 4 consecutive losing quarters, poor earnings per share, very poor relative strength. You want to keep your stocks at 90 and above on the relative strength. So any stock, the majority of you, I mean, 90% of the time, you want to be at 90 and above, because those are the stocks that are outperforming 90% of all the stocks in the market. So that should be your fishing hole. Come on,
sorry, I meant Exxon, AXON, please.
Oh, okay. Sorry. Okay.
No problem.
That makes a big difference. So, well, not really in terms of the price discovery, but this is one that we were following. Poor reaction to earnings. It tried to go, 85 relative strength, below all the averages. You can get a trade to 300, and you can get a trade up there, but you have all this. This is the kind of overhead resistance that I don't like. That running into this overhead resistance that recently occurred. So, I love the business in terms of, and they launched a new product in the retail area so that people from grocery stores and Home Depot are wearing their devices, but they're dominant. They own the bit. They own the the area.
Yeah, they have the moat, but the price action doesn't look good at all, right?
So,
okay.
We in the last, we considered it. You had this great response to earnings here, which is perfect, classic, but it just rolled over, didn't hold. So it's not in gear. But love the business, but it's just not in gear right now.
Yeah.
Can you please check Celsius?
Check who?
Celsius.
Yeah.
Celsius.
Yeah, this has been a proverbial disappointment, as well. And we've tried this a number of times in the last year, and until it, you thought that perhaps it was going to go, here and continue to go. They sold it. Very poor action, 49 relative strength. You do have just not good action below all the averages. Notice also you can use these moving averages to determine, well, is the stock in a short-term uptrend or not? And notice when the 10-day is above the 21-day, that's the green line. The magenta line is the 21-day. When the 10 days below the 21-day, that's really a no-go zone. It's in a downtrend. And so you want to see the stock finally bottom, and then you want to see, like back here in this area, you want to see, you don't want to guess down here. You want to be sure that it's turning. And so you're not going to get if you're guessing, trying to bottom fish the bottom, you're not going to see it until you get some clear support, and you need a little bit of time normally. When you get a quick move up, that leaves, you have this, what's called an angle warning, when you have a straight up off the bottom that's susceptible to turning over. So like this would be that double, see, this is your double top. This is the double top sell signal that the gentleman mentioned about Morales. There's your double top. And I actually shorted this stock. personally, on that break, see that break of the 50 on big volume right there?
Yeah. Mm-hmm.
And then, you know, with the objective going right here to the 200-day, I did cover it too early, but there's that was a setup. And so this is in no, you know, no bueno, no good.
Okay.
How would you trade Adobe?
Adobe. This is you know, this was presumably going to be one of the beneficiaries of the you know, one of the beneficiaries. It just failed. And there's your double top on Adobe. That's when, you know, again, you know, AI was red hot. The stock made a new high and then it rolled over. So it's in no man's land. They have had, you know, a lot of poor news has been coming out about Adobe Photoshop and the way they're taking information from all their clients. There's some question about that. And now they report in 2 days, so that may change everything. But it's below all the averages. It would be no go until after earnings, but it's got its work cut out for it. 16 relative strength. So again, you don't want to have your money. And if you're in the, you know, if you're in Celsius, if you're in Adobe, and I'm not, you know, again, speak to your own financial advisor. You want to get rid of those that are languishing. Stuff can be basing and going sideways, but you know, you're going to have your normal moves up, and you're going to have you will have natural reactions. There's nothing natural about this, so it's not in an uptrend. So you know, you want to be in a stage 2 uptrend first of all, and then with all the stocks that you're invested, you know, that you're interested in. But you can trade anything. So you can trade literally anything with a tight stop. But the odds are that these stocks like Celsius and Adobe, the odds are they're not working, and they're not going to continue to work until something changes. Now, something may change in the earnings call 2 days. That may change everything, where it's above 500, and then, you know, then, okay, now the move's on. The way that move was on First Solar. But here it's not actionable. CrowdStrike, God, this was wow. Okay, so CrowdStrike, by no means are they the weak stock in the group. They are the leader in the security area. And we really consider the security area, these stocks like Zscaler, Fortinet, Palo Alto, and CrowdStrike. CrowdStrike's the leader, 97 relative strength, but we actually sold it. We had a position, and we sold ours right there because we didn't want the earnings news that has been associated with like the group, and also a couple of stocks that we recently got stopped out of, like Nutanix, that looked perfect, and then they broke. But you know, this stock actually gapped down. You know, gapped up, came all the way in intraday, and then it closed at the high. And you know, so sitting there, and we didn't buy it. We didn't buy it. The day to buy it was on the earnings report right there, but we didn't buy it. It went sideways for 2 days, and then you had the surprising news where it was added to the S&P yesterday. So there's nothing that you can do about it in terms of missing it. Although, you know, we want to buy this stock. But the reason that we sold it was, look at Palo Alto. See, this is Palo Alto's last earnings report, where it looked perfect. See, it looked perfect. And then it got, murdered, down 28%. So, there's Palo Alto. That was the so-called leader. Fortinet, 23 relative strength. This was an earnings call on Fortinet. There's an earnings call on Fortinet. And so, very poor relative strength. And Zscaler. There's the earnings report. Very poor action. It's in an uptrend, very poor action. And so that's why we bailed on CrowdStrike. So it is the leader in the group. And you would think organically that this business is going to continue to, of course, to grow.
Why wouldn't you have? Why would Roy? Just out of curiosity, why did you think it was a good idea to buy CrowdStrike the day after the earnings, taking out the high of the day of the earnings?
The reaction, that was the reason. But we also knew that we had this this was, remember, 1, 2, 3, 4. This was 5 days ago. And we knew, 5 days ago, we had the jobs report last Friday. Remember, it was a hot report. That's when the market was down 300 on the open, or that day, and it closed only down 2 points. So only 5 days ago. So 5 days ago, when the Nasdaq's down 300, and we had no idea how CrowdStrike was going to trade that day. It came all the way back and closed very bullishly. So there was your buy point. But again, we probably, would have added, if earnings were out of the way, if it would have gotten tight, like right here inside before it was moved to the S&P, we would have bought it on its own merit. But now it's, we missed it. So that's, that's what we're left with.
I was wondering, why didn't you buy the day after the earnings? So that means taking out the high of the earnings day.
Good. Yeah. Yeah,
that was my question. Sorry, I didn't articulate it properly.
Missed it.
It was up 10% or so on the after hours. So that may have an entire SaaS sector, depending whose business model depends on per user, is getting crushed with CRM, Workday, ServiceNow, Nutanix, all that. So I think people were very careful on that.
Yeah. And look, we had just look at this. This is an art, guys. It's as much as we want to turn this into, a quantitative process where you do the same things over and over and over again. It's everything can look perfect, and then until it doesn't. And like, for example, we had a big profit here in Nutanix. We had a 17% profit. And the stock, this is the day before the earnings, and we didn't de-risk. We said, oh, we have a 17% profit. Maybe the stock, comes down, 5%, 10%, something like that. Well, it got clobbered, and, we sold this day. It was down 23%, down $17. We actually went from a 17% profit on this to a 7% loss. And, and this was a big winner. So we had just experienced this that looked perfect. And, and then it just, came unglued. And that's why you have to look at, well, and assess and be situationally aware of what is the market focusing on. And what's the market focusing on? What matters right now? And what's the lay of the land look like? And how do you position yourself after you do that assessment?
Yeah, Roy, I think.
But yeah, Workday, you're right. See, we had, there's been, big blow ups. There's Workday. ServiceNow is probably the enterprise company that's can benefit the most in this whole AI revolution, but that's a bad break on their number just because the group's been weak. But, this AI is legitimately the leader in the enterprise area, and they really have real products that people are using. But, it's trading poorly now. So, you take your money out of these and move to the ones with higher relative strength.
Hey, Roy.
Yes.
Yeah, I think your assessment on the CrowdStrike seems to be right. The entire sector is actually getting reset, but because your valuation wise, CrowdStrike is the highest valuation. I think the last 3-4 days of buy is mainly fun because they have to buy it. Being in S&P 500, really, that's how I really see it, because every single stock in that sector and industry is really getting, and that was a big down, because I think it was like excess of 100 PE or something like that. And everything is seemed to be getting reset there.
And you make a great point. And a number of these stocks do peak when we mentioned, we began our conversation earlier where we talked about splits and excessive splits. So there's not any excessive splits at all. We're having a few, no excessive splits. But from my experience, when stocks get moved to the S&P 500, they typically languish. Like that many times that's a short-term peak. So I don't have at my fingertips like every stock that's been put in the S&P 500. When was it put in? When did it peak? But I know that intuitively that many of these stocks peak when they get moved. Now, this hasn't been going into the S&P 500. Maybe in 2 weeks, maybe we get this move up here, and like CrowdStrike goes to, 425, in the next, 2 weeks, next 2 to 3 weeks, going into moving to the S&P 500, and that might be a short-term top. I'd be very, very aware of that, because you're right. Well, this is an outlier. So, it's an outlier. So they're either executing better than everybody else, or which the stock is telling you that, or it's just money's coming out of the laggards and moving into this one computer security company.
And the other thing is when the stock, especially in the bull market, and they get added to S&P 500, their average increase is anywhere between 8 to 12%, depending on the stocks and the how hot the stock is in a bull market. In a bear market, it's a little bit down. I think it's like 6 to 9 or maybe 6 to 10%. So maybe this is a hot stock. And this stock company certainly has a good product, right? They have a holistic product that they can sell it to the enterprises and the industries, right? That's where they're really eating other people's lunch. Nutanix, Fortinet, Palo Alto, because they have a whole suite of products. So certainly good company, but I think last 2 days of 8, 10, 12% is normal.
Thank you. Great point.
Have you looked over the years, is there any difference between the RS ratings from the IBD and the scooter rating from the stock charts?
I haven't looked at the difference, but we do utilize stock charts, not from the fundamental basis, but David Keller.
Yes.
Is on stock charts. He's fantastic. I think he's among, the best technicians out there. And, remember everybody typically that you see, a lot of people that you see, news sites and things like that, they don't manage real money, but they do have great analysis. But, it's much different when you're managing, $100 million versus just writing a newsletter or something like that. But his work is fantastic, and stock charts, they do have that scooter rating, and that's their way of comparing IBD's composite rating and you're probably coming to the same kind of conclusion looking, comparing both of those, but we haven't compared both of those. But I would
no, because in the stock chart you do the scan, so you can, let's say you can scan scooter rating of 90 or higher, something like that. So that will give you the similar kind of result. High RS.
Yep. Yeah, that's probably a great, that's proprietary. That's their way of adding something unique. And it's probably, I would think that it would be excellent.
By the way, Roy, just regarding the discussion regarding crowd, I don't want to speculate on anything, but I'm just looking at its EPS report, and it's really stellar. So anyone trying to look at it, please do take another look at it. It's a really beat it out of the ballpark on every measure.
And that, what we're having, incidentally, we are having this thin market. I didn't want to interrupt Wes, but guys, when you go back and look at that slide deck and look at we have this divergence going on right now where the percentage of stocks above their moving averages, they've come in. But go back and look, and we have some weekly charts that go back a number of years, and coming out of a new bull market, and really, we believe that this bull market just began November 1st. With all was said and done, November 1st it started in growth. Just go back and look, like in 2020, when we hit 80% of the stocks are above their moving averages. Go look at 2020, and then notice how it came down for months, but the indexes went higher. So it got thin, but the indexes went significantly higher, even while the percentage of stocks came down. And basically what it's sort of like the Zweig thrust indicator, and it did, I'm not sure if it happened in 2020 or not, but it's happened a number of times. And initially, when you have the thrust off the bottom that's so powerful, that the market can go significantly higher on the indexes. Now, the indexes are being run by just a handful of companies, these mega cap stocks. And so I think the appropriate approach is you could just buy the QLD and forget about it. Or, you could buy the FNGU, which is 3 times FANG. You could do that. Or you could buy the TQQQ, 3 times the Qs. Or you can buy the individual components like Apple, Microsoft, Meta, Netflix, Google, and Amazon. And, forget about Tesla, forget about Snowflake, forget about AMD. But you could do that, or just buy you could buy the ETF. So that's an individual, just an individual decision. This is an interesting stock that's on our watch list. This is global. Yes.
I just want to correct myself. I did state a few minutes ago that CrowdStrike was the highest PE or the value stock. It's actually CyberArk. CrowdStrike is just close second, but I just want to correct myself. I don't want to mislead people.
But no question, it is the leader.
Yeah, it is.
Now for heat, guys, like if you want more exposure, and again, we think this IBIT, and it's, this is a matter of, and I have a big position personally, here, in Bitcoin, and, several accounts, but we are convicted that this is going to be like Nvidia breaking out at 500. We think Bitcoin breaking out at 73,000 is going to launch this to 150,000. So the question is, how much it's position sizing. And this is, this an appropriate position. If you're very aggressive, it would be a 20 to 25% position going through those levels. If you're aggressive, and I mean, it is, those two are our top two best ideas. Now we're up significantly in Nvidia, but Bitcoin the second time, and we traded it from 30 to 45 the first time on IBIT, and this is a second go around. So we'll see what happens, what transpires. But in that group, so if that's the case, and you want more Bitcoin exposure, you have two places to go. You go Coinbase, which just reported an astronomical quarter, a great quarter. And of course, all these ETFs and all these coins are being safe kept, custodianed at Coinbase. Like I've read where all these ETFs, like like the IBIT, the custodian is Coinbase. So they're going to, if you only have one way of playing Bitcoin, that's through the ETF, but you have a number of ways to play this cryptocurrency scene through Coinbase, and Solana and all the coins. They're, if those go up, you're gonna have participation, for client participation in Coinbase, and that's going to be that's going to be attractive. So you have great revenue growth. Look at the revenue growth going, and this has been off my radar until recently. I mean, obviously aware of it, but look how long it went. So you got chopped up. You got chopped up really forever. Now it's just, in our view, is just setting up where it's kind of legitimately putting in a better base in the cup that it's forming. So this would be something that should go, and your buy point would be clearly, right there, breaking that down trend line. So if it breaks this down trend line, and if you want to, if you want to be real aggressive, then you could, this is one that you could buy on an inside day or taking out today's high tomorrow, press it right there, and then press it more at 283. And the other would be Mr. and MicroStrategy, which is the largest holder of Bitcoin out there. And this is going to be, if Bitcoin goes, and this is really a leveraged way of approaching it, of playing it, at 1741 game on. So this is another one that if Bitcoin, MicroStrategy close off the low, this could go tomorrow, and you have many places, to add, if you don't have any exposure, you add there, you add right there, that alert, and then, then you come out and initially and take out 2000. This, if Bitcoin goes to 150,000, this has more leverage. Like this is going to be more volatile to the downside and about 50% more volatile to the upside. So in other words, if Bitcoin doubles, this is not going to go from, it's not going to go to 2,000. It's not going to go from 2,000 to 4,000. It's going to go from 2,000 to 5,000 because it's heavily shorted. The story with Michael Saylor, right there, I mean, he's clearly been right on this move. Finally got it right, but that's kind of a leveraged way of playing it.
So is IBIT, the one you had explained earlier, also equally a proxy or not?
It is 100% proxy. And the leveraged version is, is BITX. So, this is 2 times. So if Bitcoin goes from 73,000 to 150,000, this goes double here would be 120, and this goes to like 180.
Thank you.
What about Bitcoin miners, Roy? Like Marathon and CL, SK, and Riot?
Very poor action. Very poor action. So this was, this got, when Bitcoin made this move, it got hot, but now it's the emperor has no clothes. Very poor action in the stock in terms of earnings potential. Look at earnings, they're going to be down 120%. Next year, down 47%. No earnings growth. So that's why avoid Mara, avoid Riot. Very poor action. Don't bottom fish. Buy the leader, which would, for me, it's just, okay, it's easy. Just buy, IBIT, just buy Bitcoin. This NVT, we sold this breaking the 50 because the group, we sold this a couple of days ago, essentially break even. And we bought it here, breaking the downtrend line. See that downtrend line? That's when we bought it. And it broke the 21-day, came down to the 50. We got this day 2 days ago, where it closed at the low of the day right there. We sold it right there, roughly break even, maybe 1%. And now, but it's setting up, it's not giving up the 50. So this could re-engage. This could re-engage. So this is one that I definitely would have. It's in that power area. So you break this downtrend line and it's actionable again. And it looks a little bit better than, say, VST. Where VST, that's a pretty big break all the way down to the 50. Now you have this very short-term this short-term resistance. So this is a little bit, palpable. But, that it did hold the 50. But, that NVT looks, and you've had this big move already. But, CEG, VST, it did hold. And this is what got me interested in this NVT again. See where this is a pretty big sell-off. And we really don't, we don't understand we just don't understand not just the uranium market, but the nuclear market, and what that's going to, how's that going to shape up, in the next year or two. But this is the leader in that area, and they actually, when you go to their site, it's quite impressive. And they believe that there'll be many nuclear design data warehouses out there. So that's where the interest is coming. And the CEO of the company, in their last earnings call, right there, they outlined a pretty nice strategy moving forward.
Can you say it again?
I don't know if did we talk about Regeneron, guys? Regeneron, that's setting up great. This is a company that doesn't have the earnings momentum, but the stock is potentially telling you that it's coming. Vertex too, VRTX, that broke out. Not big numbers, but something's going on in terms of, their pipeline. Let me see. Power, this STRL is in that same group as power, and it's just thin, but this is a really nice setup. There's a really good earnings report. This is the response that you want to see. You would not have preferred to do that, come through the 50, but here's the second response. And this is thin, but this is actionable, breaking above the 10-day. It's actionable right there.
A more conservative play is Walmart. Broke out to a new all-time high about 2 weeks ago. What's your take on that?
Let's take a look at weekly and monthly, and it's interesting to look at these retail stock. Man, it looks great. Look at it on the weekly. Let's look at the monthly. Looks great. Compared to, then you take a look at Target.
Yeah, way better and better than Kroger. I think Walmart and Costco are the leaders.
Yes. I think both of these, you could definitely make the case for both of these. Now, I mean, they're extended, and you have to, when you get something like this, you have to wait for like a 2 to 3 week type, and before you could buy it back. And you really haven't had, it hasn't come in. It hasn't even gone sideways for 10 days. This CP&G looks great. I don't think I brought this. This is great numbers. Look at earnings are going to be up 700% next year. It's a $40 billion company. And that's the you had a big breakout pocket pivot right there on earnings. The earnings are out of the way. It's come into the 50 and see where this is what's useful. See, you have all these targeted ahead of time, like in your game plan, guys, like, you have like, what's going to, like, how do you execute? Well, you put these alerts in. Like, we have talked essentially about every stock that we're potentially looking at where we put money, and they have to hit our alerts. So if they hit our alerts, that's what we're going to be watching at 9:32 tomorrow. Like, what's hitting our alerts, and then during the day make some decisions. But if they're hitting your alert, like if this stock takes out yesterday's high, on the open, just like we mentioned that SMCI, we're going to put money to work. That's how we're waiting for this, this market moving event that could be quite volatile to get out of the way. But if we see our stocks breaking out and hitting, our actionable points, we're going to put money to work. What you might do is you might want, for example, if something like that happens, you might put 2.5% on the open. Then, then if it's up, if it's up in the next hour or so, put up another 2.5. Then if the stock continues to work and, closes the high today, put on your full position. If that might be, that might be another 5%, and average into it. That's probably a great strategy. Oh, I mentioned this on Twitter, and we don't own this. This is such a speculative position, but AST Space Mobile, no numbers, but they signed an agreement with AT&T and T-Mobile, so that they potentially you can they signed an agreement, so they're going to be selling, this internet service, this broadband internet service network to all T-Mobile, AT&T clients, 278 million subscribers. And, the stock, when they announced it, that's when they announced it, and the stock moved from 6 to 9, came in, now it's going to new highs. So it hit my alert today, but this is such a speculative stock, but this stock has tremendous potential. And, it's one of these stocks that's, they're going to build out, they're not going to be profitable, but, you have an agreement, if AT&T sells your service and T-Mobile, then you've got millions of potential clients out there. So you can see these numbers, these revenue numbers explode, if they can execute. Very speculative, and I can't say that we've ever bought a stock under $10 for a client. Occasionally, for me, I can't. Maybe they're like, I bought a stock under $10 maybe 2 or 3 times in the last 5 years.
A-Lab.
A-Lab. Okay. So A-Lab's got a little bit of competition, but it's an IPO, and we did trade it before.
Yeah.
And guys, we're gonna go about 5 more minutes. I'm about to give way, and my knee is hurting me right now. So this A-Lab, off the bottom, there was support at 60, and you see where it came in today. And there is some competition with Broadcom, and there is some competition there.
CRDO.
Yeah, CRDO. Yeah, which looks good too. But taking out the highs, it's actionable. Taking out today's high is actionable.
Yeah. Okay, thank you.
And we don't know the business well enough to know how that competition like CRDO or AVGO hurts it. But this CRDO hit the screen right there. Put in the ants, it hit the screen right there.
Thank you. Thank you so much.
Okay, guys, I'm gonna call it a night. My leg is cramping on me. Yes.
Quick question. What was the stock that you mentioned with the AT&T? I know you have to go. If you can just mention the name.
ASTS.
Thank you. Hope your knee feels better.
Pardon me?
Hope your knee feels better, and thank you so much for hosting us.
Thank you, guys. Listen, good trading.
Thank you very much.
Guys.
Thanks, Ryan. Wes, great job.
May you continue to prosper, guys. Have a great evening. Go get them. We look forward to seeing you next month, and thanks for showing up tonight.
Absolutely.
Thanks, Ryan.
Always educational and enjoyable. ASTC, you said, right?
ASTS.
Have a good night, everyone. Bye.
ASTS.
Bye-bye.
Thank you.
Good night, guys.
Good night.
Thank you.
You're welcome.